Good afternoon, friends. Today I welcome all of you to the today's study circle meeting. Today's subject is Bank Branch Audit 2023. Today we have a learned speaker, Nilesh Joshi, who is the partner of Mukund and Chitale and Company. Today the topic we will going to be covered in today's session is audit planning, LFR, advances, and audit using MS Excel. Today we have a session chairman, Sri Nilima Joshi, who will chair the session, and I welcome and recognize the presence of CA Rajesh Agarwal, Vice President DTPA, CA Mantu Suklaji, Secretary DTPA. I also recognize the presence of Sujit ji and so many members which are not, and I also welcome.
Mahinder, your voice is a bit low.
Voice is low. Now I will request our today's session chairman Nilima Joshi to have a keynote on the subject matter. Nilima ji.
Good evening, friends. It is my pleasure to welcome all of you to our study circle meeting on Bank Branch Audit 2023. And we are very fortunate to have CA Nilesh Joshi as our speaker on this subject today. Like every year, AASB has again brought out the revised 2023 edition of the guidance note on audit of banks, which is giving us a lot of information, a lot of illustrative formats, engagement letters, auditor's report, illustrative formats for the management representation letters, the various master directions and circulars which have been issued by the RBI, which for us to get it all together in one place is a very good thing to have, especially when we are starting audit and when we get such limited time to do our bank audits. But more than that, we are fortunate to have our speaker today because he can explain to us the practical guidance, give us the practical guidance and the different aspects of bank audits, what are the processes it entails. And so it would be a practical experience for the people who would like to do the bank audits. And he would be speaking on audit planning, LFAR advances, how to check and report on the same, and the use of MS Excel while doing the audit process. Since it is a very vast subject, I would not like to take more time, but I would like to hand over proceedings to Mr. Mahendra Agarwal, who can then take it forward. Thank you.
Thank you, Didi. I request our Deputy Commissioner Shyam Agarwal to read the profile of our learned speaker.
Thank you, Mahinder. We welcome our speaker for the day, CA Nilesh Joshi ji. He has experience in assurance services for more than 16 years. He has led special audit of bank on behalf of RBI. He has also handled statutory central audit of public sector banks, foreign bank branches and cooperative banks. He has handled concurrent audit of areas like treasury, trade finance, advances of public sector, private sector and foreign banks. He has also handled statutory audit of foreign insurance company branches, mutual funds, NBFCs, and internal and concurrent audit of mutual funds and insurance companies. He has also experience of special inspection of mutual funds. He has been involved in special assignments, management audit for banks and mutual funds. He is a member of the study group formed by ECI to revise the guidance note on bank audits. He has also conducted valuations, due diligence for domestic and international investors. He has been involved in various reviews for process of one of the largest registrar and transfer agent to make processes lean. We welcome, sir, to our DTPA study circle platform.
Thank you, Shyam. Now I request Shyam to offer a digital flower bouquet to our learned speaker. Sir, please accept as a token of respect and regard from our study circle.
Thank you very much.
Sir. Thank you, sir.
Now we'll not take much time and request our learned speaker to have proceed with his deliberation on the subject matter. Over to you, sir.
Sir, you are on mute.
Yes, sir.
Today we are going to discuss about the branch audit. I have segregated these areas of this today's seminar into first is related to audit planning, then advances discussion, then how to address the issues or address the questionnaires in the LFR, and how we can use technology to carry out our audit smoothly and expeditiously. Because we all know that when we the time which we get for the audit is substantially low in respect of any bank branch audit. And because of that, we normally get 3 to 4 days or maximum 7 days to complete a branch. And if then auditor has been fortunate to get allotted 2 branches, then he has to complete first branch and then he has to move to second branch. And in the whole scenario, within kind of a 10 days, he has to finish 2 branches. So that is a challenging job. To address these challenges, I have tried to work out a schedule that how audit planning should be done and how much time should be spent for each area while conducting a branch audit. So first is a planning. Planning is very essential in respect of any audit, not only a bank branch audit. So typically, as part of the planning, what happens that normally in the case of bank branch audit, the chartered accountants get this work once in a year, and this is a typical area which he has to look into, a typical different kind of a business which he is auditing than what is normally auditing. In such scenario, that staff, if the chartered accountant is doing concurrent audit, then the staff is trained and updated, but he is not doing concurrent of any bank, then staff needs to be updated with the latest circulars and regulations. Staff need to know various commands which are used in CBS software. At the same time, the staff need to know overall how the banking functions, how the bank works, how an branch works, what are the various nuances in the branch. So that planning, that kind of a training session can be kept at the office of the chartered accountant of let's say around 2 to 3 hours, where he will able to guide his staff about the audit, how they have conducting the audit.
Sir,
Also,
just to interrupt, your PPT is not visible, I guess. You can just reshare it once.
okay. No, actually what happens is if it is video also and PPT also, it gets sometimes problematic.
Okay, sir, you can switch off the video and then
Yeah.
share the PPT. Yes, sir, now visible. Thank you.
So, as part of, if we get total 10 days for an audit of the branch, 2 branches, or around 5 days for audit of a branch, then 20% of our work should go in the planning. So, what constitute a planning? So, we will go to the next slide to understand what constitute a planning and what are the references which we need to have. So planning includes, when we get audit of a branch, first we get an offer letter, then we have to give a consent, and in case of a first time auditor, then you get an appointment letter with the name of the branches and details of the branches. Detail of branches like name, contact number. Then in such case, we should first contact the branch manager and ask him about the details of the previous auditor. And after getting details of the previous auditor, we should send a NOC immediately to the previous auditor. At the same time, we should also start working, till the time you get the NOC, we should also start working on the requirements which we need to have as a preliminary requirement from the branch manager. So these requirements specifically includes the what is the nature of the branch, what is the type the branch is dealing with, like whether it is a deposit branch or advances branch. So if total asset side of the branch is 100, then how much constitute demand deposits, how much constitute term deposit, how much constitute on the asset side, how much constitute cash credit accounts, how much constitute term loan accounts. So we first need to identify whether it is a deposit based branch or advances based branch. So if there are the percentage of the advances are on the higher side as compared to deposit, it is called advances based branch. And if the deposits are more and advances are on the lower side, then it's called a deposit based branch. So we need to understand what is the nature of the branch is. Second, what we need to understand from the branch head as part of the requirement, what we should send is that what kind of businesses are which are with if branch is in Chhattisgarh, Raipur kind of area, whether that sort of mill products. So if it is a Calcutta branch, which is a residential branch, then there will be higher deposits and some kind of advances which are more of housing nature or personal nature or vehicle loans. So to understand the nature business side type of the branch, we should, as part of the preliminary requirement, we should ask in what kind of a business the branch is in. Next part of preliminary requirement should be the what are the, because every bank has its own product, which is a own peculiar product. So every branch has its own peculiar product, and sometimes certain banks also launch area-based products. So we need to get what products we are dealing with. So the basic criteria, basic segregation of product could be cash credit, term loans, housing loans, vehicle loans, personal loans. Then certain could be the non-fund based loans. So this could be the broad criteria which we normally work with. But within the criteria of, let's say, fund-based loans or term loans, there could be further criteria for a specific product or specific business. The loans have been given. So if you get any rural branch, then in such scenario, the rural branches will have a lot of crop loans or a lot of crop loans. So in such scenario, we should also be conversant what kind of NPA criteria are there for the crop loans, what kind of checks need to be conducted for the crop loan, because in India, when we deal with pan-India geographical area, it is different rules applicable for different state. So we need to understand what kind of rules are applicable for each state. Like in case of Bengal, there is something called patta, where the crop pattern has been given, and based on that there is a SBLC guideline for each state, which gives, based on the crop pattern, how much loan should be given. So there is a calculation given by the state level bank, SLBC, state level banking committee, for which crop how much loan should be given, what is the criteria for that loan, and then there is a charge created on the land records. So if you get a rural branch, the chartered account should have understanding of that. But if you get a branch which is in which is kind of an industrial area, or which is in which is in business area where a lot of traders are there, then the branch auditor should know what kind of loans. Like if it is in a business area like Park Street, then there will be a lot of traders are there. So if there are a lot of traders, then there will be a lot of CC, cash credit accounts are there, or local local bill discounting are there. So based on that kind of understanding, the auditor should try to gauge what would be the challenges he is going to face, what would be the cash credit or CC, cash credit or term loan, or what kind of products the branch might be dealing in, and should try to get understanding of that, and should transmit that understanding from him to his team who is going to do audit on the ground. The most important thing is that the team who is to do audit on the ground has to start the audit once they land in the branch. It cannot be a learning stage or learning ground for the learning ground for them, because the time which they have got is very small, very less, and in that they have to complete the whole audit. So the planning constitutes the very important part of the overall audit, and that is not only true in case of a bank branch audit, it is also true in case of any audit or any work we do. Not only our normal audit or even in case of income tax return filing, the planning is very important. Like if the client gives the data late, then how we are trying to plan out the submission of returns on time. So in such so for any kind of activity which we do, planning is very important. So as part of planning, once you land in the branch, if the branch the chartered accountant proprietor can go there and have discussion with the branch. If the branch is in the nearby locality, or if the branch is in some outside locality, there can be a Zoom call or any other meeting which you can have online meeting with the branch head, and you can ask him to share certain important document like previous year main audit report and LFR, concurrent audit, concurrent and internal audit report, RBI inspection report. So these are the documents which we should ask for. At the same time, if the branch manager is ready to share the details of the loan portfolio with the account number. See, there is a confidentiality guidelines which we as an auditor are also abide by, and a bank also need to abide by. So certain confidential data they will not share you through email, like loan portfolio or the account statements there, which we have to go there and see at the branch. But you can always request them that you hide certain parameters, like if a loan portfolio or loan report, loan outstanding report which has been generated from the CBS contains something like a PAN number, name of the borrower, Aadhaar card number, vehicle license number, or such things, you should request them to hide that or delete that from that report, and send the report only with the account statement and outstanding balances, sanction date, sanction amount, sanction date, review date, kind of a Excel sheet you can send them and say that, and request them to send that only to you. So before you land at the branch, you get understanding of the portfolio of the that branch, and you can accordingly carry out a kind of a data analytics at your end on Excel, which will give you the which are the large borrower in the branch, what is the large exposures which they have, what are the securities which they have given, what is the value of those securities, whether it is a property or whether it is a stock and book debts or it is a third party property. So that kind of understanding you will have before you land at a branch. So my request is that whenever you have a first interaction with the branch head, keep a list ready from your side of the preliminary requirements, and then you can send it immediately to the branch head after your first interaction and ask him to start to give the data. If we are fortunate enough that we get the appointments before 31st March, then you can actually tell the branch head to send the data of 28th Feb. If we are not fortunate enough to get the appointment before the 31st March, the data of the 31st March or 28th Feb should be asked for, whichever is available, latest available. But try to get this data before you land at the branch. Second thing, if they are ready to share the concurrent internal audit report on email, get the concurrent internal audit report from them, go through the report. So if like you have got, let's say, appointment letter, you are fortunate and you have got appointment letter, let's say in next couple of days, by this weekend on 26, 27. So you have a 3 days before the closure of the bank, closure of the set financial year. So in that case, you can send immediate NOC to the previous auditor. If you get the numbers, please speak with him, request him to send the NOC immediately on the scanned copy of email, or at least an email from him. And in the meantime, you also have, if you are a continuing auditor, you have previous year closing returns, closing circular of the branch, closing circular of the bank. Most of the things remain same in that. Go through that closing circular, take of your team in the company circular, RBI circular, guidance note, and then have a meeting with the branch head and tell branch head to provide these documents on immediate basis. So if you get appointed on 26, then in such 26, 27, you can tell them you can have an immediate interaction with the previous auditor and branch manager, and you can tell branch manager to share a document by 29th. So you have 3 days in hand to carry out training sessions and carry out analysis of the data provided by the branch head. See, the RBI inspection report branch will not share online or through email. That is always available only as part of the for the showing it to us. It cannot be shared with the auditors. So in such scenario, when you land in the branch, take the RBI inspection report. Otherwise, request branch to send previous year LFR, concurrent and audit report. When I say concurrent audit report, it includes all kind of a report: internal audit report, risk-based internal audit report, revenue audit report, there could be a system audit conducted at the branch, then a system auditor report and compliances thereof. So this makes you prepare for landing into the branch with adequate preparation. That's why that's what I said, that once you do a planning, you won the half of the battle of completing the branch within the timeline which has been provided to us. Last point of the planning is that understanding of the CBA. So when you had first interaction with the branch manager or branch head, ask him which CBS they are using. So there could be 3 CBS which are used specifically in public sector bank. One of them is Finacle, other is FlexCube, which is of iFlex, which is of iFlex/Oracle, and third is of Banks24, which is provided by TCS. So ask them which CBS they are using, and try to search on the net that what kind of commands are available in this CBS, which will help you in carrying out the audit. For in respect of Finacle, our institute has already given as part of the appendix to the guidance note certain commands of the Finacle which are there on online available, which were there last year. I need to check this year whether those are still continuing, but since it is an appendices, it must have been continued by the institute. Also, there are various other what we can say YouTube channels are available, where you can get how to understand how to run Finacle or how to use Finacle, FlexCube and Banks24. So you should try to in this 29 to 31st, you should try to, and first you should try to understand this and make your team comfortable, conversant with this Finacle kind of this software, so that they will able to operate it when they start auditing at the branch. So now when we are talking about the planning stage, what constitutes planning stage is the approach where we start planning and end to the deliverables. But while planning, you should also consider what are my deliverables. So our deliverables typically in the any bank branch audit is the main audit report, long form audit report, which is we call LFAR, closing returns, which are returns which we signed as part of the financial statements. What are these closing returns? These closing returns are extract of the disclosures required by RBI and given to the branch auditor to confirm whether whatever details mentioned in that by the branch or generated from the head office are correct. So like I will give you a simple example. Like as part of a disclosure requirement, the bank needs to disclose the priority sector advances, let's say. So there is a criteria that how much has been given to MSME, how much has been given to agri and other advances. So in such scenario, what happens that the criteria which has been fed in the system may not be correct by the branch management, because let's say there is a highway project which is going on. So in a case of a highway project, as you must be aware, there is a SPV. There is a SPV which is sponsored by X company, and that X company and that SPV, under which SPV there is an agreement with NHAI, and NHAI gives license to that SPV to construct a road. So in such cases, the SPV may not have the assets on its balance sheet, in the balance sheet, which are tangible assets. They have a right to receive the tool. So in such case, what happens that these are now if you calculate by the objective criteria, such large SPVs will fall under MSME, and these are MSME. So this gets incorrectly classified as a priority sector advance. So, but that is the incorrect classification. So in such cases, you have to check whether as per the guidelines given by the RBI and the bank, whether it falls under the MSME. If yes, then that return is correct. If it falls under MSME, then you have to issue, then you have to revise the return if revision of return is possible by entering into the system of the bank, or if revision of return is not possible, then you have to issue an MOC. So like there is a capital adequacy related returns in some of the branches, some of the banks. So their ratings of the borrowers are captured. So in such scenario, what happens is that ratings are captured based on the data available in the CBS software. So there is a possibility that the rating might not be upgraded. These ratings needs to be revised every year. So if the rating is done in January 21, then the new rating should be there available by January 22. So in such scenario, if that rating is not updated by the branch, and when you search for that company online, you found that the rating has been downgraded, then in such scenario you have to update the rating in the closing return. So and based on that rating, risk weight is calculated, and ultimately the capital adequacy is calculated. So when we are dealing with public sector banks, it's a bottom up approach, where if the bottom returns, closing returns by the branch auditors are correctly done, then whatever disclosures are going in the financial statements will be correct. Otherwise it will lead to incorrect disclosures in the financial statements, and that responsibility is of the SCA to see that the financial statements are correctly disclosing the details which are required to be disclosed. So your due diligence, additional care helps the SCA to come to the conclusion that the financial statement disclosed as per the requirement of standards of accounting standards and the RBI guidelines. So branch auditors are like myself or yourself are not something which can be ignored by the system. We are very important. We play an important role in auditing of a public sector bank, and that's why whatever the quality which we need to deliver, it has to be the best and we should not compromise on the quality. Though we get the lesser time, we try to devote we need to do smart auditing and see that the quality returns which we deliver are correct. Then is the certifications. So there are a lot of certificates have been issued. One of the important certificates issued about the interest subventions in case of a crop loan. Then in such case we need to identify whether there is really that loan has been given for the purpose of crop. Now sitting at HO, if some branch officer enters incorrect classification and mentioned as a crop, see there is a ramification of that in classifying that account as NPA, then reporting it to RBI for the purpose of private sector, it will go incorrect. And third is what will happen is that the interest subvention claim also will be incorrect. So whatever entered into the system needs to be re-verified by you on sample basis to check that the data from which the certificates are getting generated, for which purpose you are issuing the certificates, are correctly entered, and certificates which have been issued by you are correct. So next is report on internal financial controls over financial reporting. So this is a IFCO FR which we also sign in case of a private limited company or limited companies, and this is similar to that which we need to do in case of a bank. In case of a branches, HO will send you the risk control matrix, and as part of your preliminary requirement you should also ask for this risk control matrix. If you find that risk control matrix certain areas are not pertaining to the branches, then you should mention that these are not pertaining to the branches, saying as not applicable while filling this risk control matrix, and which areas are applicable. When you carry out audit of each area, this risk control matrix checklist should be part of your audit program or audit checklist. So when you conduct an audit of, let's say, area like deposit, where you normally check KYC has been done, whether account has been opened correctly on sample basis, maybe 10 accounts, 15 accounts, and you come to and whether there is no and the interest has been calculated or paid in the system correctly. So this is this could be the one point in the internal financial control checklist. So while carrying out that area only, you have conducted the verification of IFC also. So once you incorporate your LFAR checkpoints, closing return related checkpoints, certification related checkpoints, and IFC related checkpoints in your audit checklist for the purpose of your audit, automatically you cover answer for everything while carrying out the area advances area only. If you are not covering, if you are not going by the requirement of the deliverables, then in such scenario what happens that you end up in identifying something which is not checked when you start reporting or that is report preparation, and in such scenario you are left with very less time so to redo that area or revisit that area. In to avoid that kind of last minute rush, please go through the checklist requirement or requirements of main audit report, long form audit report, closing return certifications, report on internal financial reporting, and map those with the your checklist for the area. Like if you have taken advances, map it with the advances, and once you have done that, your checklist is foolproof for even further reporting of your deliverables like long form audit report, closing returns, and all other things. Last point is, wherever you find any error which is a material for that branch, don't talk about materiality at the bank level. You have to discuss with the branch auditor, branch manager, the materiality at the branch level, respective branch level. So in such scenario, what happens that if the materiality at the respective branch level is much lower than what is at the bank level. So if some branch auditor, branch manager start arguing with you that you have raised a query of 15,000, हमारे बैंक के बैलेंस शीट में तो कहाँ पे जाता नहीं है, that will not work because you have to see the materiality at the branch level for the MOC purpose and not at the bank level. So if you found any error in any system generated returns, any system generated certificate, form, any balance sheet profit and loss, or if you want to classify an account as NPA, everything, any this kind of adjustment which we call as financial adjustment should be done through MOC only. There is no other way out for that, like reporting it only in long form audit report, reporting it only in main audit report. It has to be done through MOC because MOC gets automatically captured in the system, and the modified returns get generated for the consolidation purpose by the central statutory auditors. So for that purpose, any financial adjustments which you feel that it is important to be done, it should be done through MOC. No mention of the same other without MOC in long form audit report, in main audit report. If you have issued an MOC, the mention should come in long form audit report and main audit report, but it should not be otherwise that there is no mention of, there is no MOC issue but there is a main audit report on long form audit report. Also, while discussing on memorandum of changes, I want to tell that when you generate UDIN for the main audit report, the institute requires you to mention the number of MOCs and amount of MOCs which you have passed for. So this will give a data to the institute to discuss or to understand how or to showcase that how the quality of audit or is and how it is actually giving value addition to the regulator and the bank management to see that the MOCs have been see that the financial statements are true and fair. So our stage for the planning is homework. So we will go back to the first slide. Planning 20%, advances 30%, deposit 10%, other areas 10%, reporting and certification, documentation 10%, and document 20%. So if you are doing a branch at 5 days for 5 days or 6 days, it should be like this. Out of that 20%, it should be done at the office or with the branch. Other for almost 80% has to be done at the other 60% is to be done at the branch, which is part of the field work, and other 20% you need to do at your office, because as part of the peer review, the branch audit might get selected as one of the file for the purpose of peer review. So if it gets selected as for the purpose of peer review, then in such scenario your documentation needs to be perfect. So it will help you while facing a peer review or while facing any kind of investigation, if unfortunately if it comes in the future. I will tell you an example which has been shared by another CA, is that there was some fraud in that branch and branch auditor has been called for by the investigation agency to give explanation why the branch has not identified that, why the auditor failed to identify the fraud. The auditor was good, and he has the full documentation of that area which he has conducted, what samples he have taken, what kind of observations he has raised, and what kind of MOCs he has passed. So as part of his observation only, he has pointed out certain discrepancy in that account, and taking cue from that only, the bank has actually carried out internal investigation and the fraud has been detected. So when that investigating agency has called him, he has showed his documentation, what are the reporting he has done, what documentation, what verification he has carried out, what his checklist. And after going through all these things, he has which he could have collected as an auditor, and they have not raised any further investigation against the auditor. So documentation is very, very important, so that it will help you in defending your case to an investigation agency. Unfortunately, it comes in the future. Similarly, documentation is also important for the future reference. So when you get, if you get for the same bank next time, you have whole documentation ready, your 20% planning work will get the one day get reduced to half day, and you will save time on that, so that you know the bank fully, you have the documentation, what you have done earlier year, previous year, you know that. So once you give that file to your junior to study it, he is ready with what are the requirements of an audit, and then you can take just an 1 hour session to give an update. So that's why planning is important, and this way you should schedule your you can schedule your bank audit. What are the important references we should look into when we carry out a bank audit, and should be we all should be conversant with that is the RBI is the RBI circular. All RBI circulars, especially related to loans and advances, co-acceptances, and IRAC, income recognition and asset classification, should be read threadbare by the chartered accountants and its assistants. So they should know everything about what is expected by the RBI in those circulars, what are the guidelines of the RBI in respect of those areas. Second is the guidance note on audit of banks. Now this year guidance note has been segregated into two parts. One is for the statutory central auditor, other is a branch auditor. So that size of the guidance note for branch auditor is also smaller, and you can download it only the branch auditor portion. So as part of that, you can go through the guidance note on branch audit. You can give it to your assistant to read it. It is now available freely on in the soft copy also. So that is a very useful material available. Third material which I have not mentioned here is related to the tax audit. Related to the issue published by the respective regional council. So every regional council normally publish during this time material on the bank branch audit, and they also conduct a lot of seminars. So as part of that bank branch audit material is published by the institute or respective regional council should be referred into. Then there is a technical guide issued by institute on the revised format of a long form audit report. Also there is a technical guide on internal fund controls in case of public sector banks. If you read these 4 or 5 documents, you will able to conduct a bank audit nicely with quality and within the given permissible time. So now we will move to our next chapter, which will take maximum time, which is related to the advances. In between there was a query related whether tax audit report is a deliverable or not. In why I have not included as a standard delivery, because in certain banks now they don't ask for the report as such, they ask for certain returns of that for the tax audit, and in certain banks now tax audit is also centralized. So that's why I have not considered as the standard part of the deliverables in case of a bank branch audit. But if there is a tax audit report or related information needs to be signed off by the branch auditor. He need to follow the guidance note on tax audit issued by ICAI. So now we will move to the very important area of the bank branch audit is advances. So advances are bifurcated into the fund based and non-fund based. So the fund based typically are term loans, working capital finance, cash credit, overdraft, bills purchased or discounted. Then export packing credit, which is related to the export, the pre-shipment and post-shipment credits. Then non-fund based, there is a letter of credit, bank guarantee, letter of comfort, which has been now reduced post Nirav Modi scam, buyer's credit, letter of undertaking, which is also a kind of a guarantee. So the advances are mainly bifurcated into fund based and non-fund based. Now, when you assess a bank, assess a branch, you need to not only see how much is the fund based outstanding, you need to also see what is the non-fund based outstanding. Because sometimes what happens that the typical business in which the bank function, that branch function or area in which the branch function, their non-fund based limits are required by the government authorities for a specific business. Like if it is a contractor, road contractor, then normally government authority asks for the bank guarantees. So their limit for the fund base might be lower, but limit for the non-fund base might be higher. So the assessment is different in that case. If an unit is in SEZ or STP kind of area where they are importing goods from out of the India, processing it and again exporting it, in such case the goods doesn't come in normal taxable area of the country. So in such cases they require a lot of letter of credits on the basis of which they import the goods from outside and then they export it. So in such cases the actual fund based requirement would be lower than the non-fund based requirement. So when you understand what kind of a branch it is, what kind of a size of the branch it is very important that you understand how much is the fund based advance, what is the non-fund based advance, and what kind of a controls they have while issuing fund based and non-fund based advances. Next, this is the reference material specifically which I have already referred into. In addition to that, there is a prudential. In addition to that, there is a credit policy. Credit policy of the bank we should go through. The auditor should go through once it goes at the branch. Procedure manuals and internal circulars. So this is what makes us easier to audit a bank. In case of credit policy and procedure manual, we need to know the understanding of the delegation of power for the sanctioning of the loan. So whether it is at the branch office, whether it is at the retail asset processing center, whether it is at the SME processing center, such things should be, the branch auditor should be aware, and who has the delegated powers in such scenario, that should be available with the branch auditor before starting the audit of advances. Because if an advance, let's say above 50 lakhs, needs to be sanctioned by the zonal credit office, zonal credit committee, but you find that it has been sanctioned by the auditor, sanctioned by the branch manager itself, and has been disbursed. In such cases, it is not within his power. Then also he has carried out that business. He has disbursed that loan. That is like a non-adherent to the credit policy of the bank or procedure manual of the bank, which is already approved by the board, and the same should be reported in LFAR where I will specifically mention where it needs to be reported when we discuss the LFAR. So for any advance, whether it is a fund based, non-fund based, we need to we need to audit at each stage of the life cycle of the advance. One is the sanctioning, where the loans get sanctioned. Second is the documentation and disbursement, where the documents have been executed, like loan document, mortgage documents, hypothecation documents, and then after complying with the terms and conditions, the loan gets disbursed and then after disbursement, the another critical stage starts with the monitoring. So post monitoring is very important stage. Though we normally focus on the disbursement, whether loan has been disbursed correctly, all sanction terms have been complied with or not, but sometimes we miss out on the monitoring stage, where, and especially in case of a cash credit accounts, where close monitoring is required, like this document needs to be obtained on the monthly basis, unit inspection needs to be carried out, all such things needs to be conducted, done, whether we need to see whether it has been done. And next stage is the review or renewal. Review in case of a term loan, renewal in case of a cash credit or OD accounts on yearly basis, whether it is conducted. And last stage is the repayment. So the life cycle of the advance needs to be understood, and every stage of this life cycle needs to be audited by us. And our checklist, or if you see the LFR also, it is based on this life cycle of the advances only. So these three are cardinal principles of lending. First is the purpose. The purpose of the loan is used by the lender to make decision on the risk and may even impact the interest rate that is offered. So what is the purpose of the loan? What is the end use of the loan? That is very important. For what purpose the loan has been given? So for buying a plant and machinery or buying a premises, the loan cannot be of a cash credit kind of a nature. But similarly, for buying raw material or for trading, buying some finished goods or paying salary to employee, which is part of the regular operating cycle, the loan cannot be a term loan. There are certain working capital term loans have been issued by certain banks, but it should be monitored similarly as it is for the purpose of the cash credit. Then diversification of the risk. To mitigate risk, banks should lend to a diversified customer base. Diversity should be in terms of geographical location, nature of business. So when you get to know what kind of a business that the branch is in, you will also see whether there is a concentration of advances to a specific business or to a specific geography. So like I will give you an example. In one of the large bank, there is a bank which is near the diamond boards in Mumbai, and the name of the branch itself is a diamond branch. So when the whole diamond industry went into the problem in 2008, and there was a lesser export, or even currently also asking for some kind of a concession, risk restructuring, etc. And at a certain point of it has come like that all the accounts, because in 2000 restructuring applicable and was available, all the accounts in that bank, irrespective of whether requirement is there or not, irrespective of the branch, got restructured. So even the branch head, who is of a DCM level, also used to speak while speaking what used to tell us, we are a restructured branch. So when there is a focus or concentration of a business at a branch, then it always carries a risk for that branch to come under stress, because the business under for which it has lent has come under stress. So in LFR, as part of the reporting, we should, if you observe something like this, it should be mentioned that this branch caters to these many investors, these many customers, and all have exposure against the same kind of a business. So it carries a risk that if there is a recession in that particular business, then there is then the branch may come under stress, and it should be reported by us in a LFR. I will just take a pause. I am getting So next is security. As part of a prudent lending policy, bank usually advances loan against some security to mitigate risk. So when we carry out an audit of an advances, we need to see whether what is the asset coverage, what is the asset coverage ratio. So if the loan has been given for 100 rupees, normally the security coverage should be more than 100. So there will be specific mention in the credit policy that for X kind of a loan, what should be the asset coverage. And if there is a lower asset coverage, it will be in the credit policy as must have given which competent authority has the authority, competent official who has the authority to allow such kind of a deviation. So as a part of cardinal principles of lending, purpose, diversification of risk and security, on the basis of considering this at the back of the mind, we should audit each and every file of the advances. So first stage which we need to also report in LFAR, so is appraisal and sanctioning. So when I speak with advances, I will also mention what needs to be reported in LFAR. So while doing LFAR, we will more focus on other areas in LFAR than advances. So repayment capacity versus security. I will give you an example, simple example to check that how this is important. A person is there who is asking for a loan of 10 crores, whose yearly turnover is only 5 crores, out of which he makes only profit of 10 lakhs. And he is asking a loan for 10 crores for next 5 years having interest rate of 10%. So his regular EMI or regular installment will come somewhere around a lakh every month including interest. So if his profit itself is, and he is ready to offer a security for a 10 crore loan which is of a 50 crores. So at the initial appraisal stage only, it is very obvious that he is not generating adequate cash to repay the bank, repay his installment in next 12 months. So it is very clear that his cash generation is not adequate. So how you will come to know the cash generation is that don't see the profit, look at the cash flow statement provided by the borrower as part of the CMA. So and what you will look into the net cash flow from the operations. So that can be a criteria, or that can be a area where you could see that the net cash flow from the operation is less, but his repayment installment is on the higher side. And when you inquire this with branch official, one of them will say, uska to security hai, he has a 5 times security than what he is asking for a loan. So you say when security will come in the picture. You can argue that when security will come in the picture, when it will become NPA. But when your loan itself is at the time of appraisal only, you can see that he is not able, his repayment capacity is much lower. On what basis you have sanctioned the loan. So, and this can be mentioned in the LFAR that the repayment capacity is not adequate to serve the loan. So the account may not become NPA fortunately in the current year, but it cannot sustain it for the long term like a 5 years with this kind of a repayment capacity. Second thing for the repayment capacity includes the analysis of the credit monitoring arrangement report, which we in short call CMA report, where you find that the current year is given, normally which let's say we are in 21-22, the year of 21-22 is given as audited, 22-23 as provisional, and another 3 years as estimated or projected. So in such scenario, when the provisional figures or estimated figures for financial year 22-23 are given, you as an auditor need to check how much he has achieved till date. Maybe if he has submitted it in the month of December, he might be saying that he has done a business of 50 crores. He will do a business of 50 crores, but till December he has achieved only 25 crores. There is a possibility that he is such a business that it is a seasonal business and he will achieve 25 crores in next 3 months. But there should be a query from your side to the branch head saying that how, on what basis this renewal has been conducted, or on what basis this appraisal or loan has been given. So you cannot ask why you are given loan, but you can always raise a query saying that when his business project provisional balance sheet says that turnover is 50 crores, but he's saying it will be turnover of 100 crores by the end of the year. What kind of explanation the branch has sought for the justifying his turnover of 25 to 50 crores in another 3 months, and whether that explanation has been made part of the appraisal memorandum. So in such scenario, if it is not made part of the appraisal memorandum, then you should mention it in the LFR in respect of the credit appraisal, whether credit appraisal controls or credit appraisal procedures are adequate. This shows, so the authority which is approving such loans normally goes by whatever mentioned in the by the branches. So if it is a SME processing center, retail asset processing center, or high level credit committees of the executive directors or the board, they cannot go through each and every paper which has been submitted to them and each and every page of the agenda paper. So they normally rely on the preparation made by the branch and zones. So if the preparation at the branch or zone level itself is incorrect, it may create different picture or incorrect picture in the mind of the competent authority, and it may sanction loan based on that picture which has been shown to them. So it is very important that the appraisal memorandums are appraisal memorandum should be checked to the veracity of the information given in it. I have seen certain appraisal memorandum talks about n number of pages, talks about the industry in which the business audit in the borrowers are, but it doesn't talk specifically about the borrower, that how his financials are mapping with the industry. So it might say that industry will go at the rate of 10% every year, so YoY basis there will be growth of 10%, but he is showing the growth of 20% or 25%. So that means his share of business or share in the overall business should increase, and what kind of expenses he has done for that. If you analyze this, then you will come to know that the appraisal has not been done correctly, or appraisal has certain lacunae, and those lacunae has not been queried by the branch manager or branch team to the borrower and get the reply, and they have got the replies for the same. So like what I have given an example, if the industry is going at 10%, how someone can grow at 24 30% in leaps and bounds? So for the purpose of getting loan, you are showing any projection figures and then calculating MPBF and various current ratio and DSCR based on those projections and getting the loan from the bank. But that could not be the correct way of doing it, because if industry is growing at 10%, he cannot grow at the space which is much higher than what industry is growing. He will also grow at the space or little higher of the space in which industry is growing. So if you bring it down that 25% and recalculate it at the 10% or 15% or 20%, there could be a scenario where current ratio is not 1.33:1, the DSCR may not be 1. So as part of our reviewing of the appraisal memorandum, we should take all these scenarios provided by the borrower in consideration and the reading of the appraisal memorandum while commenting on the appraisal process of a branch. Next is calculation of MPBF, maximum permissible bank finance. This is which is calculated in respect of a cash credit or a working capital loan, and there is a formula given by in the credit policy where it says that how it should be calculated. But you can see whether the figures which have been considered in that MPBF calculation are correctly extracted from the financials or the CMA data, and the correct calculation has been done. Also, you need to check the veracity of the information mentioned related to the MPBF. Next is whether that loan has been sanctioned by the competent authority. What are the waivers given by the competent authority? The most important is how these waivers have been tracked. So if a competent authority has given a waiver, let's say for the not obtaining stock statement for first 3 months, because it is a new business, so there is no point in obtaining stock statement for, let's say, first 3 months, or waiver given by the competent authority for obtaining insurance policy from the agency other than what bank is dealing with. So such kind of a waivers or deferrals, what we call, needs to be tracked by the branches and needs to be reported as part of their returns, monthly returns to the competent authority, that how it has been closed. So if you found that the deferrals or waivers have continued for a longer period than what is actually mentioned in the sanction terms, then it should be highlighted in the same should be highlighted in the LFR, saying that there is a waiver for this approval for deferral or waiver has been given by the competent authority, and these should be complied by within 3 months. However, branch has not complied with the same. Now the next part is the pre-unit visit report. So wherever there is a new appraisals are carried out or new or renewals are carried out, the branch officer should visit the unit of the borrower. I will give you a simple example which we have come across, is that the borrower was a construction company who used to actually in the business of constructing foot over bridge on the railway tracks or railway stations. So the branch official went and visited his office. So and he has submitted a report that office has 5 people and there are various other offices of this square feet, and it is owned office, all those things. But if you see, such report is not useful in case of a contractor whose all stock is at the site. So we have said that this is not a unit visit report which is envisaged by the as part of the appraisal. Whether the branch officer has visited his large sites, he has seen the progress of the work. Have you taken an engineer certificate on your record for progress of the work, and what kind of controls they have on over their inventory at the site, and what kind of a security measures or protection measures they are taking at the site, so to avoid any kind of a mishap, because these people are constructing bridges over the railway tracks, because that can bring a risk of penalty on the borrower. So none of that has been mentioned. So we said that this is not a unit visit report for the sanctioning of a loan, and the same should be mentioned in the appraisal in our audit in our LFR, saying that the unit visit report is not adequate to conclude how that unit visit report is not adequate to conclude about whether the borrower has how many contracts and what is the progress of the contract. Then we come to the security related issue. First is a valuation report. There is a legal search report in case of a premises or a building or flat or a land or a factory building. So I will give an example. See, in case of a large plant, one bank has financed one portion of the machinery which is imported from UK, which has been installed in that plant, and as per the valuation report of the engineer, the machinery cost XYZ rupees. Now we ask them whether this machinery can be sold independently than the plant. They said no, this machinery is part of the assembly unit of the plant, so it is one of the part of the assembly unit, so it cannot be removed, and it cannot be sold exclusively. Then I said, what is the use of this valuation report for them if that machinery cannot be sold? So that means that that machinery or machinery is not realizable. Then after this questioning, the bank has obtained additional collateral of a flat of the borrower. So valuation report or engineer's report or a legal report cannot be independently seen. It needs to be seen together with each other. Like in case of valuation of property, if valuer mentions that the property is of 100 square meter, but legal a non-encumbrance report mentioned the property is of 80 square meter, then the if you reduce 20 square meter based on the valuer criteria, then there it could be a asset coverage ratio may not fulfill. So valuation reports needs to be seen whether it has been done by the impanel valuer, legal report whether it is done by the impanel valuer, and it should be seen along with the engineer's report or legal report in case of a land building premises, factory building, such cases. And in case of a legal report also, it should be very clearly mentioned that it is unencumbered property and the borrower has the right to sell the property. It should not happen that there is some right having created by XYZ person on that property and borrower doesn't have the right for the selling of the property. Then obviously if the accountants NPA, bank will not get the right because it is not a clean right. So borrower should have the clean right on the property. Many times what about the legal report also, the lawyers mention lot of objectionable points, and at the end of that they say subject to this the property can be encumbered. If such case, then we need to check what are the objectionable points, whether it is a hindrance in case of sale of the property in future if that account becomes NPA. So these reports need to be analyzed properly and before as part of our verification of appraisal process. And these three also, certain points of these also become part of your internal financial control. So if you incorporate the checklist related to internal financial control in your checklist for the credit appraisal, it and LFR questionnaires in the credit appraisal checklist, it automatically answers all your questions related to the appraisal from IFC perspective also and from LFR perspective also. And you can prepare a checklist in Excel. The checklists are available on the at various forums also by the institute website. So you can download it, you can incorporate the IFC point and LFR point if they are not there, and you just fill the checklist. So when you can pick up the portion of all these points whenever you want to report. Like you want to keep it for your documentation, you can keep it. If you want to report certain point LFR, you have to just filter it, which will show as a part of last segment how to filter it, and then report it in as part of a LFR. If certain discrepancies are there in terms of failure of the controls, then that can be picked up from by just filtering and maybe reported as part of an exception if it is material in respect of IFR related report. So at the time of doing audit only, if we carry out our prepare our checklist correctly, then we are actually doing our reporting simultaneously. So we will save our time on reporting. Since branch audit is a kind of a T20 match, what the people call for. So in case of a T20 match, whatever you hit, it has to be 6. So if you follow this principle, you will surely hit a 6. Next stage in the credit advances is very important stage is the documentation. So first is whether the document is a duly filled and complete loan and complete in respect of all documents. So what we observed in many banks is that the bank branches is that the documents are not completely filled or they are incomplete. So somewhere rate of interest नहीं लिखा है, somewhere address of the borrower properly नहीं लिखा है, or certain schedule is not filled. So such kind of, if you observe anything, the same should be mentioned in the LFR. There could be a spot rectification which could be done by the branch head, if you are if you could get time to check that, you can consider it. But if you are short of time, and you cannot verify that, you you should continue to mention it in the LFR. Then is title search report, that is a lawyer's report which I have already explained earlier. So it should be unencumbered. Then mortgage deed for immovable property, hypothecation deed for movable property. So whether it is a registered mortgage, whether it is a British English mortgage by submission of document only. If it is a registered mortgage, then you need to get details of the registration fees paid, how much is stamp duty paid. You need to get clearly whether these documents which have been executed have been seen by the lawyer for completeness of the document, and whether the lawyer has specifically mentioned about the adequacy of the stamp duty. Because though you are from X state, like if you are from Bengal, you may get an audit in Bihar, you may get an audit in Jharkhand, you might get an audit in Odisha. So you may not be conversant with the stamp duty rates of each state. So we should obtain a schedule from the branch or from the empanel lawyer of the branch, ask them and see that stamp duty has been correctly paid. Then valuation report we will discuss. Then third is if there is a, then next is the, if there is a purchase from other party, then in that case, and the loan is disbursed for that purchase, to identify the correctness of the value which has been disclosed, we should ask for the purchase order or invoice copy from the borrower to see that if the plant is of, let's say, if a machinery has been bought and it is of 26 crore as per the borrower, whether the purchase order which has been issued by the borrower is of 26 crores, or invoice copy which he has, if he has already got it in his premises. So that needs to be checked. DPN needs to be entered into, and the DPN should be executed by the borrower with the date on it, because every DPN is valid for 3 years. So date is very important on the DPN. Then compliance of the sanction condition should be seen. So when sanction has been carried out, sanction has been done by the competent authority, it gives that before disbursement these conditions should be satisfied with. So all documentary evidence should be obtained to see that the branch has complied with the conditions mentioned by the sanctioning authority, and then only the loan has been disbursed. Then next is the demand promissory note, which we have discussed. Then stamping we have discussed. Then charge creation with ROC and CERSAI. So in case of a property, land, building, factory building, the charge needs to be created with the ROC in case of a company, and charge needs to be created with CERSAI, authority CERSAI, for all kind of a persons, company, partnership, or individual, everyone. The charge needs to be created at the CERSAI website. So there is a receipt from CERSAI website which is generated. It is called CERSAI search report, which will be available in the file, which clearly says that the charge has been created on the CERSAI website, on the CERSAI. Also, as part of the renewal process, the to see that none of other persons. I will give another example in respect of the delay. What kind of a risk banks are carrying in case of a delay in creation of CERSAI charges? A bank has lent money to a person for buying of a property, and on, let's say, on 1st March 2022, and within 1 month the CERSAI charge needs to be created. The bank has delayed creating a CERSAI charge on that property, and created the CERSAI charge and tried to create the CERSAI charge in the 31st May. In the meantime, what has happened? The borrower has created fake documents, and mortgage the same property with some other lender, and that lender, based on those documents, has disbursed the loan and created a surcharge charge on that's the same property which has already been mortgaged with the borrower, with the bank. Now in such scenario, when the and this borrower was fraudulent, so automatically after a certain point, when they at the time of creation of surcharge charge on 31st May, they observed that the surcharge charge is already created on that property. They started inquiring about it, and they have realized that though loan has been disbursed by this bank earlier, the borrower has taken loan from some other NBFC, and that NBFC was efficient to create a surcharge charge before the bank, and hence the borrower right to occupy the property or purchase the property has reduced. So now what has happened, that borrower, they have already filed a complaints against the borrower. At the same time, these two, one bank and other NBFCs are also fighting with each other in the respect of who has the higher right to purchase the property. So in this case, the recovery has actually taken a second then proving who has the right over the property. So you should see that the surcharge charge is created within 1 month from the date of the mortgage, and also ROC charge has been created in case of a companies. Record of the all equitable mortgages obtained even by non-surfacing notified banks or financial institution with the surcharge. So a record should be obtained from the surcharge that how many properties this borrower has and how many of them are already mortgaged with someone. It will help the borrower, help the bank not only in doing the documentation properly, but also helping the credit appraisal to understand the how many loans he has other than from the CIBIL record. So this will help them also in appraisal. Next is the disbursement. So there are two kind of disbursements, basically reimbursements or direct disbursement. So like a simple thing, if someone is coming for housing loan and he said that I want to take a housing loan, out of that I have already paid 50%, but I want to take as per the bank policy LTV, 80% of the LTV is allowed, so I want 80% of the loan, and I will use that money of 30% for myself, and 50% I will give it to the builder or the owner of the flat owner. Okay, in such scenario, we need to check whether he has really paid money to the earlier seller, which is claiming to be 50% of the value of the agreement. So either it should be mentioned in the agreement that how much he has paid, or the seller should confirm that he has received this much funds from this person, and then only 30% could be given to the borrower and 50% to the seller. Otherwise, if he could not produce the adequate evidences, that means that he is not giving additional correct information, so the disbursement could be kept on hold till the submission of the information. Direct disbursement is the example where he comes with that, he said that I have paid 20% or I am ready to pay 20%, kindly disburse 80%. So it is made directly to the seller. In such scenario, the money should be directly transferred from the bank loan account through RTGS or check to the seller, and it should not be debited to the current account of the SB account of the borrower. So there should be a clear trail should be established about the payment to the vendor. So when the disbursement, before the disbursement, the first stage is loan is sanctioned, approved by the company authority, documents have been entered into. Now the important stage comes is the master creation. So master creation means opening of the loan account in the system. Maybe it's Finacle, it's FlexCube or Banks 24. The there should be a maker checker. It is again a part of IFC that there should be a maker checker at the time of creation of master. We need to, as an auditor, we must check that all fields have been entered correctly into the system, and whether two officers have authorized that entry into the system. So it should not happen that only one officer, the entry has been posted in the system, disbursement has been made. Technically, it is impossible in any of the CBS to post or to create a master with one officer. It has to be a maker checker concept, which needs to be other too. But what happens that there could be a bulk posting, like the various masters have been created by the maker or a clerical or officer level person, junior officer level person, and the chief manager or manager of the branch से हाँ ठीक है तुम क्रिएट करते जाओ, मैं बाद में शाम में सबका एक साथ ही अप्रूव कर दूंगा. And he starts approving those at the fag end when the branch is near to close, and he approves all the masters. So in such case, it is possible that he may not, though there is a maker checker concept, he may not check it correctly, so that the masters created in the Finacle are correct. So the important field in the master creation, whether it is advances or SB or TD, is the PAN number or Aadhaar card if it is provided, the name of the entity, the status of the entity, residential status of the entity, the nature of the entity. What I mean by nature of the entity is whether it is a person, whether it is a firm, whether it is a HOF, whether it is a company, that should be correctly entered. The security value, primary and collateral both, and the next is very important, is the date of the valuation which is entered, and next is interest rate of interest. So how it happens, that works like that, the base rate, or what we call as MCLR nowadays, or repo link rate, is already updated in the system automatically by the data center. So if it says that 8.5% or 9.5% or 10% is the MCLR or repo rate of the bank, repo rate of the bank, then that is already entered into the system by the head office. Now what is there in the sanction comes is that MCLR plus 100 basis point, that is MCLR plus 1%, that is mentioned in the sanction. So as an auditor, we need to check whether this 1% has been correctly entered into the system, or there is some, or this has been incorrectly entered as 0.5% or 1.5% both way. So that auditor need to see by checking the masters of the system. Also, auditor can carry out an analysis of the account statement to check that whether interest rate is correctly charged as per the sanction letter. That session we will take after as part of our IT use of Excel, that how to check that interest rate has been correctly charged. So this master which has been created needs to be checked by the auditor thoroughly with these certain important points which I have mentioned, and also it should also say what is the sanction date, what is the renewal date, and what is the end date of a loan. Now what happens in case of a term loan, specifically there is a issue in respect of Finacle, is that this repayment schedule needs to be mentioned. So we will need to check that whether repayment schedule is also mentioned correctly by the system, in the system. Charges for processing of loan account, loans, security creation, stamping, insurance, whether those have been collected because if those have not been collected, it will lead to revenue leakage. At the same time, it will also have repercussion on the GST liability of the bank. Then last thing which we need to check is the interest on advances and also on the temporary over limit. So and penal interest. So temporary over limit is that in case of a CC account is the if the branch head has the power to give temporary overdraft for 10 days or for 7 days. In such cases, the overdraft may be given at a higher rate than what is the sanction rate. So, as part of a master, we should see whether there is a specific module for the temporary overdraft, specific field for that. If it is there, then what is the interest rate mentioned by the sanction letter for the temporary overdraft, and whether it has been charged properly or not. Second thing, in most of the cases, in most of the banks, there is a charges also levied for the non-submission of stock statement on time. So till the date stock statement doesn't come, there is a penal interest has been charged by the bank. So the flag which is there for the penal interest should be on. There should be a tick on that flag. And stock statement date should be entered into the system every time when the stock statement has been entered into, and based on that, and we should check that. And if you find any errors in such cases, the same should be rectified immediately. If it is possible to calculate, then you should ask branch to calculate the penal interest or charges which have not been collected. And if it is material amount more than 10,000, then MOC needs to be passed, and the same should be mentioned in LFIR. Don't only mention LFIR, please pass MOC also. Whoever pressurizes you in respect of the same, then also you don't get carried away with the branch management, because एक बार MOC आ जाता है तो उनके दिन मन में खलबली हो जाती है, MOC आ गया. It is just a rectification of error, and which we also do in case of a normal audit, where we do adjustment in the financials before finalization. So MOC has to be passed in case of any financial adjustment. And tell about the MOC at the when you are on the, don't tell at the time of closure of the branch कि आज MOC करने वाला है, इसमें MOC आएगा. You tell them in advance, so they will also get time to calculate. But at the same time, when you say that MOC आने वाला है, so automatically your cooperation level from the branch may go down. So you have to strike a balance to maintain that MOC needs to be issued, but at the same time you have to inform them at the correct time when the MOC needs to be issued, and accordingly you should issue an MOC. Then operations and monitoring. So we have completed 2 stages of the life cycle: appraisal, documentation and disbursement, and now third is the operations and monitoring. So whatever sampling you carry out or whatever sample you select, we need to, one is the sample which you select for the purpose of credit appraisal, sanction and disbursement. Normally these are loans which have been renewed during the year, loans which have been sanctioned and disbursed during the year. In that also you should carry out a top to bottom, top down approach, so that you select large amounts in the large amounts which covers more than 60 or 70% of the branch business which have been sanctioned during the year. And for the renewal, similarly you should be able to cover 60 to 70% of the branch business. In case of operations and monitoring, you need to carry out a ABC analysis. So in case of large accounts, you need to be A, so those should be large accounts should be selected. In case of mid, lower number of accounts could be selected, and C is the retail housing loan kind of a thing, or certain MSME loan, but which are of term loan nature, where operations, there need not be operations on regular basis in their account, so these ones should be selected. For the operation monitoring purpose, how that selection should be done is that you take SMA report on various days. Now there is a daily running of NPA, so you take outstanding and overdue report on odd day of the month, and the accounts which are in SMA 0, 1, 2 during that odd day, and if you find that those accounts are continuing to be standard for certain period, again appearing in SMA 012, again they are standard for certain period, again appearing. So these are consistently after certain period of time they are coming in SMA. Select those accounts and review that how these accounts after coming in SMA have been regularized, from where the funds have come, whether these are actual funds which have been come, or whether it is through some office account, there is some kind of a evergreening has been done by the branch. So you need to check that in case of SMA 012 accounts, how these accounts have been regularized. That is very important when you carry out operations and monitoring area verification of the bank branch. So certain standard points what we see in the operations and monitoring are transactions which are susceptible to fraud to be directly reported by RBI to the RBI by the auditors. So if you find anything suspicious where you find clearly that loan has not been given, it could be easily identified that loan is not used for the purpose for which it has been given. Like you may find that loan has been given for the purpose of buying plant, and the borrower has said that I have already paid 50%, now only 30%, now you are giving, there is a margin of 20%, so 80% you need to reimburse. And when you reimburse 30% to borrower and 50% to the vendor, this 30% got transferred to the account of the borrower, and from that it has been paid to a broker, share broker, or it has been paid to a gold jewelry merchant. That means whether share broking is a regular business of the borrower, whether jewelry buying is or gold buying is a regular business of the borrower, that needs to be seen. If it is not, then why these payments have been made? That also you are saying that you have invested it in the plant and you have more than 50%, that's why we have reimbursed you for your business purpose, but actually you are using it for other than business purpose. So such accounts should be, if you come across such transactions, this needs to be specifically reported in LFR. Also, you should kind of send a separate email to the statutory central auditors, stating the whole scenario and note on such accounts and stating how this has been done and what are your observations. And if you feel that this is a account which needs further investigation, you can specifically mention in the LFR that these accounts needs to be forensic audit or investigation needs to be carried out in such account. So this is very important that any disbursement is made, how you monitor that where the end use has been done in respect of these disbursements. Second is, in case of a CC account, there should be a turnover in the CC account. So if the CC is given for the 10 crores, the constant limit is coming at 10 crores and he is utilizing the full limit. Okay, and there was no the turnover in the, and as per the CMA data, as per the provisional statement, you find that the turnover is 50 crore of that company. That means monthly 50 crore of the company, means at least there should be monthly credits of 40 crores in the account from where he has received from his customers. And if you find that there are no credits or the credits are only 10 crores or 15 crores, that is an alarm whether his business running normally or not. So this could be a red flag or early warning signal in respect of some problem in the account, some problem in the health of the account. There could be certain inherent weaknesses in the account, so that needs to be highlighted as part of LFR. Any transfer to group company needs to be seen with the magnifying glass. What is the justification for transfer to group company? Even if it is a sale purchase between the group company, whether branches obtain explanation for them and confirmation that these are these transfers are for the genuine business transactions and are at arm's length. So any transfer to the group company needs to be seen very seriously. The stock and book debt statements needs to be received timely and there should be aging of debtors and non-moving stocks should be shown separately. Like I will see for another example which we come across is that in case of a job processing industry, the large manufacturer use like I have done in case of a fan borrower who is having order from a large, very well-known, reputed fan manufacturing company for preparation of blades, the fan blades which we use for. So the contract is that person will get metal sheets from the company. He has to cut those metal sheets in the required shapes as per the requirement of the company, and give it back to the company after doing the putting color on the metals, those fan blades. So while auditing, we found that he is only in the business of processing of those of the material which has been received from the fan manufacturing company, but he is showing even that stock in his book, stock statements. That means that this stock is not owned by him. Then also that stock has been shown by him in his as part of his drawing forward. So we need to when we carry out audit, we need to understand what is the business of the company, and if the business is of processing nature, how there can be a stock in his account when the stock is owned by the fan manufacturing company. So that means the DP has been overshot, and when DP is overshot, and if you reduce the stock of the fan manufacturing company, the DP is much lower than what limit he is enjoying. So that account should be classified as NPA, and MOC should be issued, and that should be mentioned in NFA. So while reviewing stock statements, we should be diligent enough to check that whether there is a movement in the data, or same data is appearing less than 90 days in last 12 months stock statement or 6 months stock statement. That means there is no movement, but then also company is trying to put that data in the as part of the drawing forward. However, it could be a reality that he is less than 90 days all the time, but then when such aberration has been seen, why branch has not asked for the explanation for the same. So such things should be checked whether branch has adequate processes, controls and checks and balances to see that the adequate such explanation has been sought for and kept on the record. Next is related to the periodic unit visits report and stock audit conducted by the outside person, as well as unit is conducted by the employee of the branch. So the calculated stock, the objections or queries or observations in the stock audit should be considered while calculating the DP for the next month. At the same time, whatever stock audit has been observed, whether same has been mentioned in the unit visit report, or whatever mentioned in the unit visit report has been considered by the stock auditor, whether both are complementary to each other or both are contradictory to each other. And if you found any contradiction, the same should be mentioned in the LFA. And if you find that stock auditor has a lot of qualifications or observations which are not considered at the time of unit visit, then you should mention it in the LFA, and also immediately see that if the unit visit is conducted for such thing, immediately see that if such recalculation of DP is carried out for previous period also, and whether that and if it is much lesser than the limit, which the borrower is enjoying, then in such scenario that account should be classified as NPA with a MOC with mentioned in the LFA. Also, we need to review the audited financial statements. So in respect of audited financial statement, we need to see that there are no qualifications in the audit report. There is no mention in the what we call as the other matter paragraph of the audit report. Now the new CARO and the the last year's new schedule 3 financial statements for Ind-AS and normal companies use lot of details which are required for the bankers to take cognizance of for the purpose of appraisal. So you need to see what are mentioned in the financial statements of the borrower in respect of the going concern related issues, in respect of the what liquidity related issues, what in respect of the Benami transactions or such things which are there, or long term funds utilized for the short term funds utilized for the long term, whether there is any comment on this, whether the borrower has disclosed it correctly or not, and if the borrower has disclosed something which is not in line with the normal practice, then whether the branch has sought explanation for that, and branch has kept that explanation in record, and whether it has been such explanation has been put to the competent authority through appraisal memorandum specifically. If there is a qualification, post qualification, if that qualification has been considered, what will be the profit of the company? If the profit goes down substantially, then in such cases the whole appraisal needs to be reviewed and revised considering the new profit figure or new loss figure or revised figure, and if it is not done, then the same should be commented on in LFR. And every 3 years the acknowledgement of debt should be obtained from the borrower, or balance confirmation certificate, take delivery letter, in whatever nomenclature calls. Every 3 years there should be acknowledgement from the borrower about the debt, because there is a something called Limitation Act in our country. So as per Limitation Act, if an acknowledgement is more than 3 years old, it goes under it falls under Limitation Act, and then such debts are not liable. So to avoid such issue, see that all long or old loans, the bank has taken take delivery letter or acknowledgement of debt or revised DPL on regular basis. And what is the process the bank has for the same. Now what happens that this all will be also part of your IFC again. So when you check all this thing, map it with the IFC as part of your checklist, LFR as part of your checklist. Again, what I said in credit appraisal, disbursement documentation, your report is ready for the advances. Now, in case of a loan against securities, demat papers have been taken, physical shares, if they are, then whether they are in custody of the bank, that needs to be checked. In case of loan against FD, which we always kind of or loan against LIC policies, which always say that हाँ ठीक है ये तो loan against LIC है ना, उसमें भी on sample basis में भी C category kind of a loan you should check in the system, and physically that FD receipt has been discharged by the borrower and lien has been marked on the FD receipt, and lien is also marked on the in the system, because what is important is the lien marking in the system than lien marking in the receipt. If the lien is not marking the receipt, and nowadays it is a CBS kind of environment, someone can go to the bank, other branch of the same bank, and request them to issue a new FD saying that my FD has been lost, and based on that the new FD could have been issued against that FD, and then he could make take additional loan or surrender that FD and gets funds. So to avoid such scenario, it should be there in the system. Lien should be marked in the system itself. Periodic statement of valuation of shares pledged to ensure margin is maintained. So that is in case of a loan against security. Charges for late submission, non-submission of QIS, stock statements, inspection, valuation, renewal report. In this case, what happens that QIS is a quarterly information statement which needs to be submitted by the all consortium member to each other. What we observe that branch keeps on following for the QIS, but they didn't receive it. In such scenario, the branch is helpless. So what you need to see there, whether branch has followed up or not. At the same time, you should also look into that whether branch has issued QIS statement, FFR, not QIS, FFR to the other branches giving the information. So whatever exchanges between the consortium members should happen, it should happen on the time. And as this branch expect that there should be cooperation from the other bank branch, immediately they should also do their duty diligently to send the information to other banks also. And nowadays the sending information is very easy. You do not have to send the post or courier. It is just an email they have to send. So you can ask them to show that whether the emails have been sent by them or not. Also, all insurance policies should be in favor of the bank, and you should check on sample basis to see that the insurance policy is in the favor of the bank and then the insured amount is adequate. So what happens in case of an insured amount, if let's say stock or plant or machinery is of stock is of 100 crores and the insurance policy is taken only for 80 crores, the borrower always argue that the insurance policy what I have taken is not on the highest stock level but it is on the average stock level. So you should see from the stock statement what is his actual average stock level, and if you find that his average stock level itself is 100 crores and he is taken policy on 80 crore, that means he is saving unnecessarily on the insurance premium but putting the bank on the higher risk, because they will get the insurance claim to the proportion of the policy and not to up to 80 crores. So if there is a 60% destruction in the go down and there is a fire and there is a 60% loss, what they will get is only 60% of the 80 crores and not 60% of the 100 crores. So the insurance policy which has been taken for the stock statement should be adequate to cover the highest stock held by the borrower. At the same time, the insurance policy for other than stock statements which has been taken should have a clause of replacement. It should not be the claim of the depreciation. It should be like a no debt policy. So all insurance policy should be no debt policy and it should have clause of replacement, so that in case of a depreciation policy, what happens that machinery has been brought over 2 years or 3 years back, whatever insured value mentioned in the machinery, mentioned in the policy is the depreciated value of the machinery. But if there is some mishap, then the borrower should get the full insurance value so that he can replace that machinery and start his and continue his business to repay the bank. So if it is just a depreciated value, then he has to put his own fund and again restart the whole process of manufacturing or a plant, and in such cases he will not able to continue to earn adequate funds which he normally could have earned in case of a new machine. So it should be a replaceable cost of the machinery and not the depreciated cost of the machinery. So RBI in its master deduction on fraud has mentioned 43 early warning signals which have been listed here by me. So whenever you are carrying out audit of an advance, if you come across any of this early warning signal, then the same should be reported as part of the LFAR. So, and it should be brought immediately to the attention of the bank branch management that this is what you observed, because based on this observation they have to red flag the account. So otherwise what will happen, which is a centralized scenario, then what will happen, you will complete your audit, then you mention it in the LFAR, then that LFAR will go to the zonal office or regional office, there it will get consolidated, then it will go to the circle office, or what they call is the zonal local head office or zonal office, and there it gets compiled, and at that point of time, after a month or after a couple of months, when the auditor will come for the purpose of consolidation of LFAR, that time you will observe that there is a point which you have raised related to early warning signal, which requires a red flagging by the branch, red flagging by the bank, which is not done by the branch. And then the whole process of red flagging as per the circular start. So by that time it's already elapsed, delay of 2 months has happened. So when you come across any kind of this thing, any early warning signal, it will be immediately flagged by you to the branch and the zonal office, marking a CC to the or CC to the statutory central auditor, who can take up the matter with the competent authority to to carry out an investigation and mark that account as a red flag account. Because an account, once it is marked as red flag, any further disbursement by any other bank, it is difficult for that borrower. It is like a CIBIL record. So if you are a defaulting party in the CIBIL, normally loans are not issued given to that borrower. Similarly, higher due diligence is carried out in respect of that borrower, and these early warning signals are applicable for loans above 5 crore initially. Now it is brought down, but you can check for all loans, even though the red flag is not required. This is kind of a checklist for you for reporting in LFR that this has been, and any of these early warning signals have not been observed by the branch or head office which you have observed, then it should be then you should specifically flag it. Also comment on the system of identifying early warning signal in your LFR. So one is a reporting in LFR on the specific account where you observe the early warning signal. Other point is the commenting on the process of marking red flagging. Also, in case of early warning signal, there is a requirement that once that account has been red flagged, the bank needs to appoint a forensic auditor to check whether the fraud has taken place or not, or bank has to carry out an internal investigation. In most of the cases, bank appoints a forensic auditor, and in some cases what we observe, the forensic auditor is not being cooperated by the borrower at all. So forensic auditor submit an inconclusive report. The bank carry out an internal investigation, and bank itself and bank declares that account as no fraud. So in such scenario, you should give a mention of that in the LFR, saying that 2 accounts have been identified as have been marked as a red flag. Forensic audit was inconclusive. However, based on internal investigation, the bank has identified these 2 accounts as no fraud. So it will be very useful document or useful information for the statutory central auditor to ask a bank what are the discrepancies or what are the disconnect between your internal investigation, how the borrower has cooperated to you and why he has not cooperated to the forensic auditor, and they can present it to the RBI or audit committee of the board about, and they can showcase that there is some lacuna in the whole process. So that's what that's why I'm coming back to that. You are the branch auditors are the real auditors who are working on ground. They can provide very important input to the statutory central auditors and the top management about the functioning of the branches. So you have larger responsibility and role to play in the whole scheme of things, even equal to a statutory central auditor. It's not like that statutory central auditor is at the top and you are at the bottom. Rather, it's a partnering role where we are also statutory central auditor, but we always feel that our branch auditors on ground are our partners and they are not our subordinates. So they are actually getting hands-on information, on-field information, on the basis of which they can carry out a more effective audit than what a statutory central auditor will carry out sitting at the head office by doing some data analytics. So as part of your, now after telling all these good things, the mute question remain is that how all this thing can be done in the 5 days. The way I have explained in my earlier first slide, 20% planning, 30% advances, you can actually plan out your every day like this. and whatever query you also kindly make a Excel sheet of the queries and send it to the branch head on every day. And you can also, sometimes your queries may be half baked or half cooked. Please don't share queries, but once you are crystallize the queries, send that, and like that you continue that Excel sheet till the 5th day or 6th day of your audit, and keep on sending it to branch head. Once you send on the 3rd day, you realize that you are sending the query list to the branch head, but he is not giving you the reply. Kindly escalate that matter to the zonal level or circle level, stating your problems, and then he has to reply, and then you obtain his replies. And after 5th day also, after your escalations also, if the branch head doesn't reply, then you can push all the queries in LFAR. But the queries which have the financial implication or adjustments required or emotional instruments should not be pushed to LFR just because branch is not reply. Otherwise, that could be the strategy of the branch head to avoid any kind of any MOC. So if you are observing something like this, please immediately bring it into the attention of your statutory central auditor. They will tell bank and the zones under them that to reply to your queries and give clarification about the same. So this completes our advances related portion. Now advances means first stage of the advances. Now we will move to the repayment, because review renewal I have already discussed. So we will move to the repayment, that is source of funds. So when an account gets closed, we auditor normally say that during the year इसमें क्या है, वो ब्रांच बोलता है ये तो अकाउंट क्लोज हो गया, अभी इसमें क्या आपको देखना है. ओवरड्यू अकाउंट अगर क्लोज हो गया तो भी वो बहुत खुश होता है, देखो उसने सारा पैसा पे कर दिया, अभी कुछ बचा नहीं है, आपको ये अकाउंट क्यों देखना है. सो व्हाट you should not be complacent with this kind of explanations by the branches, because what happens that you need to check from where these accounts have been closed, from where the funds have been come, whether these funds have been come from giving loan to its group company by some other branch of the same bank, or some LC has been issued to in the foreign, or some LC has been issued by some other bank, or these people have issued some non-fund based limit, utilize some interchangeability, what they call cash credit to non-fund based, issued an LC, that LC has been discounted by other bank and the amount has been come in cash credit, and cash credit has brought in the negative in the credit. So you need to check whether there is how these accounts have been closed. That is very important. Second point is releasing of documents. So unless and until there is all formalities pertaining to closure of the account has been done, the document should not be released. So there should be a receipt of funds, there should be a discharge by the bank also, and then only the document should be released. And after releasing the document, the bank should tell borrower immediately to remove the charges, because he should submit the form 4 for removal of charges immediately to the bank. It is in his interest to submit it, because otherwise he has to pay the penalty. And also banks records are also clear, and once all these formalities are done, once that account has become zero, the account should be closed in the system. I will tell you our experience if the account is not closed. In case of one of the very large financial conglomerate, they have taken a loan from a short-term loan of 1 year from a bank, and they used to take these kind of loans. So they used to close one loan, and before closure of the and after closure of one loan, they used to kind of carry out auction, means kind of a tender from various banks, and who was whichever bank has the lowest rate of interest, they used to take loan from that bank for their short-term purposes. So what happened that this bank has closed the loan, the financial conglomerate has repaid the loan, and after the repayment of the loan, there is some small 15 rupee charges have been levied for some SMS purpose or some other purpose by the system as part of the month end run. And in the meantime, after a couple of months, the same conglomerate has taken 1,000 crore loan from the bank. And when IRAC is now automated, IRAC has been run, that whole conglomerate of 1,000 crore with 1,000 crore outstanding has been classified as NPA, because that 15 rupees which has been charged in the previous account are due for more than 90 days. So of course, when they saw such kind of a name in the books, they have realized that there is some problem, so they have carried out further analysis, and they identified that such 15 rupees are pending, for which waiver has been obtained, the account has been closed, and then again the IRAC has been run. So to avoid such scenarios, it is required that the account needs to be closed. Also, such accounts which are specifically in case of CC, where limit is not made 0 and it has brought in credit, are prone to frauds, because with the branch manager, once limit is there, the branch manager can always give loan from such accounts. So branch manager can always give utilize that CC, has a right to utilize that CC, and there could be a debit in this account and credit to some other account, some other fraudster account, and it can be utilized. So when there is a closure, when there is a repayment, or CC account is constantly in the credit, the limit should be considered marked to 0, and in case of a term loan, the account should be closed. So this is where we have reached to the fund based related credit appraisal process, memorandum process. Now we will move to the bill discounting process. Product. So bill discounting should have sanction limit based on the appraisal. Bill should be endorsed in favor of the bank. Credit report from the drawee should be there. So these are the documents which are there in the checklist, which should be there. A due diligence of genuine trade bill should be conducted. So whether that is if it is between the related parties, additional due diligence should be conducted. And by Google search, you can identify whether XYZ export party is a related party or import party is a related party or not. Try to do that and keep it as part of your documentation, the screenshot or evidences of that. So the amount of bill discounted and vis-a-vis the nature and size of the borrower. LR should be the lorry receipt. If it is an inland bill discount, lorry should be through IBA impaneled transporter. Bill of lading should be available for bill when there is an import by the borrower, and recovery of charges and collection of interest should be done, and so the same should be checked whether it is as per the sanction letter and as per the system. So in case of a LC, as everyone knows, is an arrangement that is irrevocable and thereby constitute a definitive undertaking by the bank to honor. So it is like a bank guarantee, a kind of a bank guarantee for the trade purpose. So there should be LC application by the buyer, pro forma invoice, purchase order, license if under restricted category, insurance and credit report of the importer in case of LC is more than 300,000, and compliance with the various regulatory guidelines. Bank guarantees are regular bank guarantees. So bank guarantee should be normally issued by the normally approved by the treasury requirement. The draft should be vetted by the legal department, and then only the bank guarantee should be issued. So there is one more area which we need to look into, is that the size of fund base vis-a-vis of non-fund base. So as part of audit, when we carry out our sample for top advances, the outstanding should be total of fund base and non-fund base should be considered, and then we carry out. So if it is a non-fund base issue like LC issuance or BG issuance, then the focus should be different and then what we call do it at the time of fund based advances. Whereas in case of when there is a fund base is more, then focus should be on the fund base. If there is something called interchangeability of the limits, then it is always risky from the auditor perspective that on what basis interchangeability has been done, because there is a separate criteria for assessing a cash credit requirement, separate criteria for assessing a LC, and also in some of the export importers, it is allowed that the advance given to the exporter should be considered DP. It should be specifically given in the sanction letter. Then only it should be allowed. By this, we come to the end of the advances portion. Shyamji, can we take 5 minutes break and then we'll start LFR?
Surely, sir. Surely, sir. We can definitely do it.
Okay. So we will take a 5 minutes break and then we will start with LFR.
Yes, yes. Thank you,
In the
sir.
meantime, we can have questions or doubts if anyone has. We can discuss that.
Okay, so to all the participants, if you have any questions, you can either write in the chat box or you can unmute yourself so that we can start.
If participant here has any question, they can raise their hand and mute themselves. Sir, one question is, should we visit our large borrower the branches as a statutory auditor?
Sir, your voice is not clear.
Sir, he's asking whether we should visit the large borrowers' branches.
So generally in LFR, we have to report the large borrower who have more than 5% of the branch advances.
More than 10% of the branch advances.
Right, sir. So whether statutory branch auditor should visit the large borrower office or factory or whatever.
No. Normally, branch auditors are not. Branch auditors are carrying out audit of the bank and its branch and its processes. So we are not an auditor of the or carrying out audit or visit of the borrower. So we should not go there.
Okay. Sir, one more question. Suppose generally some advances become NPA, like the loan which is on an EMI base. Suppose some loans are not repaid their EMI after December, but they are ready to pay in the month of April during the course of audit. Should we avoid that NPA or we should disclose in the MOC?
See, nowadays the NPA is an automated run and which is done on the daily basis.
Right, sir.
So there is no chance for any kind of adjustment or accepting the payments which have been received after the due date, even after the 31st March. So there, because of this automation of the system asset classification, there are no ifs and buts in respect of even delayed payments in respect of NPAs.
So generally what happened, while they are preparing the advance register category of the NPA, branch itself doesn't mention it is a NPA. Sometimes there's some manipulation so that these things doesn't differ in the NPA category. While scrutinizing the advances category, we found something
Mahinder bhai, volume.
Which are generally NPA but not disclosed as per the advance register.
No, sir. What you should ask for, you should not ask for or accept any Excel-based register. What you should ask for the system-generated return.
Right.
All banks, all software generator returns of kind of what we call in earlier era we used to call jotting of the accounts. So when you get the jotting of the accounts, it gives all the details. So like in case of a Bank of India, they call it CCIS. Okay, so in case of a State Bank, there is some other nomenclature. I will just give you. I have that ready.
Sir, I have an experience on the SBI branch audit. They have the printout like the jotting of accounts or advances. They have shown the account as a performing asset. But while scrutiny the ledger,
No, sir. That means while converting into the Excel, they have done some kind of a mischief in that.
Right.
So whatever you ask for, you should ask the report which is directly generated by the system, even if it is in the text format. So after this LFAR, we will we will have last session. on how to convert this text format into Excel. So that will help you to work on to avoid such kind of instances. So like Bank of Maharashtra call it all PA and PA file. Punjab National Bank call it RPT 3/7 daily outstanding. Then Bank of India call it CCIS. Canara Bank call it BI report server. Union Bank of India call it A1, A4. UCO Bank call it BS5. Bank of Baroda all advanced MIS data. Indian Bank call it loan balance file. Central Bank of India call it loan balance file, because they have same software. IOB call it loan outstanding as on date. Punjab Sindh Bank call it loan balance file, and SBI call it all-in-one file for PANP. So fine, all these things give similar kind of a information. So whichever bank you are auditing with, you ask for these reports from them, irrespective of nomenclature, and ask them to give a system generated report, not a report in Excel. If it is a text, it is great. If it is PDF, then there could be some problem, but text file you try to ask from them. So we will take 5 minutes break, then we will assemble for LFR.
Surely,
Okay,
sir.
sir.
Thank you.
Sure.
So can we resume back?
Yes, sir.
Yes, sir, we
Please.
can.
So we will start with our next chapter, long-term audit report. Sir, you need to tell me how much time is left. Huh?
Sir, please proceed. No time limit, sir. You can do as per your convenience.
Yeah. So the areas covered in LFR specifically are cash, balances with RBI, State Bank, SBI, and other banks. For branches with treasury operations, they have to maintain balances with RBI and State Bank of India. Money at call and short notice, investments, advances, other assets, deposits, other liabilities, contingent liabilities, profit and loss, gold, bullion, security items, books and reports, interbranch accounts, frauds, implementation of KYC ML, management information system, miscellaneous. So first area of the LFR is cash, balance with RBI, and money at call and short notice. The investment area is normally not applicable for the branches. Now in 2015 Master Circular and IRAC of 2022, you have to refer 1st April 2022, the new IRAC has come. Then there is a prudential framework for resolution of trade asset. These are the credit policy and all that you need to refer as a reference material. The important studying material or reference point could be the technical guide issued by ICA on the LFR. Like this, the technical guide which has been issued by ICA on LFR, it has been actually taken based on there is a if you remember, there is a guidance note on CARO which has been issued by ICI. Similarly, for each question, how it can be verified and how it can be answered. So if you read that technical guide, it will be easier for you to reply to the questionnaires of the LFR. So the first question in cash is that, does the system ensure that cash maintained is in effective joint custody of 2 or more officials as per the instruction of controlling authority, or the cash balance at the branch or ATMs have been checked at periodical interval, maintenance of cash retention limit. So there is something called key movement register which is maintained by the all branches. Those who are doing concurrent audits, they must be checking this key movement register. So you please go through that key movement register and along with the attendance register. So you will come to know that whenever the officer who is holding the keys is going on leave, at that point of time he has to transfer the keys to other officer. And if you also at any point of time that the keys have not been transferred, these keys have not been transferred. In respect of NPA, I will share certain slides which have the answers also, and I will also discuss it for 15 minutes, those slides afterwards, after completing LFR, because there are 2-3 points in LFR, there are some 5-6 points in LFR which I want to specifically mention, which as part of branch audit sometimes we miss out. So so that key moment, see, this is one of the this is part of the IFC also. The cash is very high risk area in IFC, internal financial control, and this key moment register is a control in itself. So if that key moment register, there is no record of the key transfer and that officer on leave, that means the vault has been operated by some other officer who is not in possession of the keys, which is a non-compliance and very high risk control, because if something goes wrong, there could not be any accountability in such cases. So this we need to review on sample basis. Then cash balance at a branch and ATMs are checked by the branch heads on the regular basis. So that could be considered. Only in respect of ATM, you need to identify whether the ATMs are in-house or outsourced. In respect of outsourced ATM, the cash balance need not be checked, because that is the responsibility of the cash replenishment agency, and they are responsible for the cash maintained in that. But in case of a branch, if it is in-house by the branch, it is responsible for the branch head. And in case of recycling machine, there is something called cash recycle machines also nowadays available. So if that is outsourced, no need to be checked by the auditors. But if it is in-house of the branch, everything needs to be checked by the auditor. Then maintenance of cash retention limit, there will be a circular or letter from the head office that how much cash retention limit should be maintained and cash should be. And there is a report from the system where it's mentioned how much is outstanding on the end of the day for outstanding cash balance. So that can be easily compared, and you can mention that in how many cases you have observed that when excess of the cash retention limit. Balance confirmation should be obtained from the respect to the other bank on year end, and there should be a reconciliation should be carried out. If there are no differences, then also reconciliation needs to be prepared by the bank stating that there are no outstanding pending items to be reconciled. Then in case of advances, large advances, outstanding amount fund based plus non-fund based more than 10% of the outstanding aggregate balance of fund based plus non-fund based, or 10 crore which is lesser. So all accounts which are above 10 crores you have to cover irrespective of the percentage of that to the total advances. This is very important that all accounts above 10 crores needs to be covered irrespective of the percentage of the same to the total advances. What happens that many times when someone is doing large branches, there are many advances which are about 10%, about 10 crores. But if you see, if it is a 500 crore branch, the 10% come to 50 crores. But there are various advances which has been done, which is about 10 crores, maybe running in 20-30 numbers. But as per the RBI requirement, this needs to be verified, this 20-30 advances, and needs to be commented upon. So there you can check what is the sample size and all that, and you can check all these advances. In case of advances below threshold, you have it should be a process review. So how to calculate the funded non-funded, that is the formula given by the RBI. Also now you have to mention which accounts you have checked. So here you have to write the account number, account name, balance at the year end of fund based, non-fund based, and total. And the end you have to calculate it, how much you have covered and what is the percentage you have covered of the total advances, and you have to comment on that. If it goes below, RBI has not mentioned any threshold, but if it goes below the threshold of less than say 60%, that means it may not be considered as adequate coverage. So, but if you have a housing loan where a lot of advances are there and it is like running into hundreds of accounts or 50 accounts at a stage where housing loans, small housing loans are given, then it should be more comment should be mentioned on the process, and the same should be mentioned here that these many accounts have checked, though they are as part of the percentage they are lesser, but you have checked the process of the sanctioning of the housing loan. Sheer due to volume, we could not cover this for more than 50%. This we have already discussed. Now we will come to the question related to the NPA, asset classification and provisioning. Identification of NPA through software. So nowadays all NPA needs to be on daily basis, needs to be marked as NPA by the software itself, which is called system-based asset classification. As part of the closing manual or specific instruction from the SCA, it will mention that which are not covered by the system. So as you all are aware that there are NPA criteria which talks about the 90 days in case of a term loan, more than 90 days. If it is overdue, it classifies as NPA. In case of a CC account, if it is outstanding, it is overdue for continuously for more than 90 days, then the limit overdrawn, then it is classified as NPA. If stock statements are more than 3 months old, then the DP becomes 0 because settlements are valid for 3 months, and then it becomes NPA. And if adequate credits are not there to the interest debits of previous 90 days, then an account becomes NPA. Second thing, the fourth criteria is there are no credits in the cash credit account, then that account becomes NPA. So all these are what we call as a objective criteria of classifying account as NPA. So there are certain objective accounts which are there. There are certain subjective criteria which are there where accounts will be classified as NPA. So there is something called if the date of commencement of commercial operation is not achieved, then that account can be classified as an NPA if it is get extended. In such scenario, what happens that whether the Finacle, CBS or any other CBS has the capacity or capability to capture the date of commencement of commercial operation. If that CBS doesn't have that capability, then all these things are monitored outside of the CBS. Then in such cases, this IRAC automation through the software will not work. So as an auditor, if it is not there, then we need to check that manually, and we need to see what control the bank has for that, and it should be part of the IFC which you are going to report. But there are certain subjective criteria. As we are a chartered accountant, when we go to the balance sheet of the company, we realize that there is an inherent weakness in the balance sheet of the company. Whatever turnover that account is trying to show, or that person is trying to showing in the projections, are not adequately supported by the actual performance of the company for last 2-3 years. There are issues related to or there are evidences or suspicions related to the fund diversion by the company outside the banking system. If you come across such issues, and if you are confident that this account is inherently weak, irrespective of whether it is regularly repaying or whether there is a money coming in the account, the auditor has right to classify that account as NPA through MOC. I also want to actually talk about the point related to the accounts which are under SMA category and have been regularized by doing wrong things. So an account is under SMA category, which is overdue, which is more in SMA 2 category, is more than 30% to less than 60% kind of a scenario. So account is in SMA 1 category, and the account would have been slipped if the money would have come to SMA 2 category and then NPA. There could be, like it is an account of partnership firm where X and Y are, which we have come across also, X and Y are the partners. So that account is overdue constantly, and if money couldn't come by 31st or by within 90 days, the account would become NPA. What banks are trying to do, they will sanction loan against property to one of the partner X, who is a separate entity, separate person even for the income tax purpose, and the money received from that X, it get diverted, or X says that money has been taken for the purpose of, let's say, property repair or XYZ purpose, and that money gets deposited through, that money goes out of the bank in RTGS and immediately comes, or next day it comes back to the overdue loan account of the borrower. If you could identify this trail, then both accounts should be classified as NPA, because this person has helped that account for the round tripping or evergreening of that account. Because once that amount is paid, that account will not come in SMA for next 2 months and will not become NPA for next 3 months. So if such kind of transactions are taken care or are entered into by the bank to accommodate the borrower, then this should be specifically specifically mentioned in the LFR. The account should be classified as NPA through MOC. And just don't, when you observe such thing, just don't mention it in LFR. If you are confident that account is inherently weak, there are additional evidences, adequate evidences which you have to prove that account is inherently weak, please classify that account as NPA through MOC only. Then there are other example is that I have a CC limit which is overdrawn, but there is also a LC limit which is given to me, and my CC is constantly getting overdrawn, but my LC limits are unutilized. So what banks do, they say that they take a approval from the competent authority or within the branch manager power interchangeability of the limits. So the LC limit, which is let's say 10 crores, CC limit which is for 50 crores, they reduce the LC limit from 10 crores to 5 crores and give additional 5 crore limit to the CC, and by that regularize and bring that CC within the limit. See, a CC limit is given for the purpose of their regular business. If it is getting overdrawn constantly, means either the borrower is over leveraging and doing over trading, or the borrower doesn't have the business, and there is no much turnover in the borrower account, so that his CC limit is not getting regularized. Now giving by reducing the LC undrawn limit, going for the interchangeability and regularizing the CC limit is not a good practice. That means that account is NPA. This will not come in any automation of IRAP. Any kind of automation you do, this will not come. So this has to be what the branch auditor need to look into. If such transaction is done, then the account should be classified as NPA, and there should be a debit freeze on the account, and the such practice should be specifically mentioned in the LFAR by the auditors. The third example in such scenario is that there is a LC limit, CC limit is overdrawn. The CC limit is LC limit is LC has been issued, and the LC has been issued in the related party. Related party has issued a bill against on the company and against that LC, and that bill is discounted, and that funds come back to this company in the CC account and regularize bring the CC limit below CC account below the limit. Whether it is NPA, yes, because it is not the own fund which have come to regularize the limit. These are the funds of the bank only utilized, so should be classified, such accounts should be classified as NPA. Now, this what we have discussed that could happen in case of a CC account. There could be a evergreening in term loan account also. So in term loan accounts, there could be a scenario where the term loan accounts 2 installments are due for repayment, and there is a CC account also which is undrawn, and there is some portion which is undrawn. So there could be the borrower may issue an RTGS outside the bank through that CC account which is undrawn limit, and bring those funds after and on the due date or after a couple of days to the term loan account. When such thing is carried out, that means that the CC limit only is utilized to regularize the term loan. So this is not a practice which is envisaged to regularize the overdue account. So such account should be classified as NPA. So on this matter, if you have any other scenario which you want to discuss, I am open to it. Otherwise, we will discuss another 2-3 scenarios. You can put it in chat box also.
So if anyone has any query, they can put in chat box also, or any.
So one more scenario which we have observed in regularization of the term loan is that use of inter-office account. So term loans are overdue constantly, and the inter-office account has been used for same account has been debited, term loan account has been debited, saying the charges or penal interest, and those amount has been transferred to the inter-office account, ex-inter-office account, and the amount has, and same amount has brought down and so same amount has brought in the overdue term loan account through some other inter-office account. So what has happened is that there is no link can be established to see that there is a same date there is a debit credit in the there is a debit credit in the term loan account, but it is not from the same inter-office account. So as a system or any of the system cannot establish a link in this. So as an auditor, when we see there is a repayment in any term loan account through the inter-office account, we should start digging in that account. So there could be large, huge entries in the office account which has been used like a clearing or RTGS, where on daily basis there are many entries coming in that account. So we need to pinpoint on that specific entry to the TRAN ID and then see that for that entry from where the credit has come in that inter-office account, because inter-office accounts are always a parking account. There cannot be balance at the day end in certain inter-office accounts. So if there are no credit coming in this inter-office account, how this account can be regularized without getting the funds? If there is a credit in the account, we need to see from the TRAN ID of the credit entry in the account that from where the credit has come. So if it is from outside, then there could be inflow of actual funds. If it is from the inter-office account, from where the account has been, where the amount has come from the debit to the term loan account, that means this is clear case of evergreening, and these accounts should be classified. Both accounts should be seen as misutilization of inter-office account. There is a certification required at some banks from the branch auditor about the utilization of the inter-office account. In that certificate, you should mention this kind of a misutilization and mark that term loan account as NPA. Also, this should be mentioned in your LFAR as a suspicious transaction, and a forensic should be suggested for such account. Also, you need to see that when a branch or manager is in place during his tenure, whether he has sanctioned loan to a typical kind of accounts. What we have observed that in one of the bank is that a branch manager had sanctioned loans to certain accounts, those who are in same business, those who have same kind of securities, and those who are related parties. So like that, he has sanctioned loan around 50 crores during his tenure in that branch, and by doing this kind of a jugglery, he used to keep those accounts standard always. Then he got transferred to other branch, and after his transfer, this jugglery had stopped, and that point of time it came to know that these are overdue accounts. So even those accounts are not showing any kind of a sign of SMA, if you found that the branch manager had sanctioned within its power or zone had sanctioned within its power certain kind of accounts which has a trend, then it should be immediately, those accounts should be seen in detail by the auditor. Additional effort should be put on those accounts, and if you observe some kind of a trend or some kind of a standard practice in sanctioning and disbursement of these accounts should be reported in LFAR by you, saying that you may not find, first year you will not find any errors, because if these accounts are sanctioned somewhere in December, January, mainly these such accounts are sanctioned for the purpose of target achieving in the month of either quarter end or year end. So you will not find any errors in the first year. This account started showing errors in the next year. So, but if you as an auditor is diligent enough to identify such kind of a trend in these accounts, or this can be specified over 4 quarters also, pacified over the 4 quarters also, then such things should be actually put in the LFAR. You may not be able to classify the account as NPA, such things should be put in the LFAR and should be classified and should be mentioned, specific mention should be done in the LFAR, and you should send a specific letter to SCS saying that you have observed this in this zone, in this branch, you have observed this kind of account. It will help SCA to direct other auditor or request other auditors to carry out additional diligence in any other account, any other branch in that zone. Also, I request you that if you identified something and if you have crystallized that this thing, don't wait till the end of the audit, which may be, because once you have started reporting on this, the branch will keep on dragging the audit further. So don't wait till the end of the audit to report. Kindly report it upfront to the SCH through email so that they can take their action in other branches also and request other branches to check that, because the other branches would not have completed by that time. It may happen that if you flag it at the end of your audit, by the time other branch auditors would have completed their audit, and this will bring the whole other branch auditors in the soup if something wrong happens in that branch, in those their branches. So as a professional brothers, you need to help them also. So I request that if you observe any kind of such thing in your branch, please don't wait till the end. If and you are confident that whatever you observed is correct, please don't end. Please identify, escalate these matters immediately to the statutory central auditors. This is one kind of evergreening or regularization of account. Second is a other kind of, there are various methods by which the branch try to save the NPAs. Now, as an auditor, we always have a third eye to look at all these things. So we need to apply our diligence and see that the branch is, I will tell you, not utilizing such things to regularize the NPA. I have done concurrent audit of one of the large bank, and there we have observed that one account we are constantly reporting as NPA, constantly reporting as overdue. But what happened that the account, the branch head came on 15th March and told us that, boss, you people can submit the report afterward for the month of March. Now our branch is under statutory branch audit. Statutory branch audit and central auditor will be our auditor. So they will come. They don't need to wait for the allocation. Their allocation is done already. So you people please stop coming to the branch, because I don't have space here, and I need to accommodate them also. I need to also attend to them. So it is confirmation that we should stop our audit from your HO. So internal auditor. So accordingly, he was smart enough to get that confirmation and instruction from the internal department. So we submitted our February report, and we out of so we have mentioned that in XYZ account, if we regularize, it will become NPA on 31st March. After our submission of the report, the branch auditor, statutory auditor came. He completed the audit, but since he was a central auditor, he has not finalized the report. He went to some other branch and said that this I will sign afterward. First I have to sign the branch which comes under some other branch, which is a smaller branch as compared to this. So he just kept the report on hold. Then we called them somewhere, this is somewhere in the month of April, somewhere in the 15th April, we called them and we told them that whether we can come now or we should come after. Then we requested them to allow us to start, because then March report is pending. If we start by delayed April report will also get delayed. So they, after a lot of deliberation, they allowed us somewhere on 15th April to start our work. So when we actually verified the loan outstanding as of 31st March, we found the account is regular, the money has come. So we were surprised that for last 10 months we are constantly saying the account is under SMA2 and how money has come in this account suddenly in the month of March. So what we observed that their bank has a account with some other borrower and he has the CC limit unutilized in that account. So what these branch officials would have done, either they have requested or without the consent of the other borrower, they have debited that CC account and credited this overdue account on 29th March. And statutory auditor has completed the audit on 11th April. He went back. He went to other branch. After that, they have credited this. They have again debited this account and credited the account from where they have took the money. Now there was an interest component which has been charged in that account. So we actually realized that this is what. That how interest has come in this account, how this account has suddenly got started utilizing on 29th March, how that borrower is paying on 10th April, why he has done all these things. So it is started with overdue account regularization and utilization, sudden huge utilization in a CC account which was not utilized for almost for 6 months. When we seen both these accounts together, we realized that this is what is done by the branch. So we asked for the voucher for this and consent of the borrower for transferring, and we asked what is the relation between these two borrowers. The branch needs to establish the relation, purchase, sale, or kind of relation between these two borrowers. The branch could not establish the relation between the borrower. The branch could not show the voucher which has been signed by the other borrower for the transfer entry. Fortunately, that statutory central auditor was known to me. I immediately called him and told him that this is what we have observed and we are classifying as part of our concurrent audit account as NPA. You kindly look into it. You immediately come back to the branch and see what they have done. I am ready to share my, I have already given my draft observations to the bank, and you are a statutory auditor, you are privy to it. So he came back and then he has looked into all these transactions and then he classified as account as NPA. So the various, what we can say, ways and means which the branch management tries to avoid an account to become NPA on 31st March, that as an auditor with our experience and within experience sharing within the profession, we need to actually identify and see that in your branch which you are auditing, such kind of scenarios which are not taken care or which branch is not indulging into, because it will put you at risk, at the same time branch also at risk. And such kind of a scenario in small accounts, even the top management is not bothered about. So it is what the branch manager does it in their power to save their account to become NPA and achieve their targets. So this is sometimes scenarios which we have observed as part of our audit, to where the branch tries to fool around and try to keep the account standard. Now I want to touch upon very important aspect where the RBI is constantly watching it and constantly telling all statutory central auditors and banks to be very careful about is the suspense accounts, sundry accounts, branch accounts, subsidiary deposit account, whatever nomenclature called, other than the accounts which are depositors account or borrower accounts, whatever comes other than fixed assets, and the fixed asset, other than fixed assets, the what we call as typically other asset, other liabilities. The RBI is very critical on these accounts in respect of the number of accounts at the branches, in respect of the utilization of the account, and in the respect of the non-closure of these accounts. So what RBI has told very many banks to carry out a comprehensive audit of these accounts at central level and submit report to the RBI. As a branch auditor, when we are checking office account, we have to be very careful about following three aspects in the respect of office account. One is utilization of the account. What is utilization of the account? Every office account is created for a purpose. We should on sample basis should go through the account and check that whether that office account has been utilized for that purpose only, or it has been not utilized for that purpose. If it is not utilized for the purpose mentioned, it should be reported in RFI. Second, debit entries more than 6 months in the office account. Every bank has a policy to provide for office accounts, and bank should provide for office account as per the policy, so should make provision by debiting P&L. So if you observe, I am not talking about the, please listen me carefully, I am not talking about the outstanding is more than 6 months, I am talking about a debit entry which is more than 6 months doesn't have a corresponding credit. So any debit entry which is more than 6 months should be provided for. If the bank policy says more than 90 months you should provide it, more than 90 months should be provided. So please go through the inter-office account policy of the bank, and you should go by the entry wise and not the outstanding balance wise, because there could be a 10,000 debit of the rupees 10,000 debit in the account, office account, and which is related to the X party, whereas there could be a 12,000 debit in the account, the credit in the account, so account becomes a credit balance of 2,000, but it is related to the Y party. So this 10,000 debit related to the X party receivable or certain dues receivable from XYZ party remains as 10,000, but it gets offset against the receivable from the or receipt from the Y party. So RBI says that don't go by the outstanding, go by the debit entries pending in the outstanding account more than 6 months. This is an important point. Third point is the control over office accounts. Who has the controls over internal controls over the office account? Who has the authority to operate the office account? And in absence of that person, whether any other person has utilized those office accounts. So purpose of the account, aging of debit entries and controls over the office account needs to be thoroughly checked by us, and it should be reported in LFR if you find any kind of a mischief happening in the office account. And if you find any entry which is more than what we call 6 months or 9 months old, it should be provided for in the office account. Don't go by the outstanding, go by the entry in the office account. So other high risk areas are conversion of inoperative account to dormant account. So all documents which are required as per KYC guidelines should be checked. Then after the balance sheet date till the date of audit, whether there have been any unusual large movements in the aggregate deposit held at year end, if so obtain the clarification. So if we see that huge deposit coming at the fag end of the month, like 29th March, 30th March in the account, deposit account, and then it is going on the 2nd or 3rd April, please highlight the same. If you see that there is a huge transfer from CC account to current account at the fag end of the year or fag end of the quarter, and there is a trend of that, please highlight and comment whether it is a overstatement of the deposits and advances. These are done by the branch heads for showing the high targets which they need to achieve. Then other very important area which RBI has brought in the revised LFR is adequate system process as required to adherence to KYC and AML guidelines for prevention of money laundering and terrorists. So we need to carry out a test check for the whole process which are done at the branches, so they get AML alerts on daily basis for their various accounts, and as part of our audit we need to see whether the AML alerts have been closed correctly, what are the documentation they have obtained for closure of AML alerts. So all contingent liability needs to be mentioned, and any devolved LCs or invoke BGs needs to be mentioned which are not regularized. You should carry out a variance analysis of the income and expenses in the profit and loss account as compared to the previous year. So in case of NP account, whether interest has been correctly reversed or not, that needs to be checked. Divergent trends in major items of income and expenditure that should be highlighted, and as explanation should be sought for the same. So wherever there is a gold, bullion or security items which have been kept in the custody of the bank, either by the borrower or as either depositor, like safe deposit vault where depositors are keeping some security items or gold bullion, what are the controls over those security vault needs to be checked. If there is a huge increase in the gold loan, because that is a priority sector loan nowadays, where it is used for the crop loan purpose, then huge increase needs to be checked for the ultimate utilization. So if it is for the purpose of crop loan only, then crop loan procedure should be followed, gold will be as a security. But it is pure gold loan saying that it is for the purpose of house repair, it is not considered for the crop loan. It doesn't accept for the criteria of crop loan or IRAC purpose or NP identification purpose. Then frauds, confirmation of reporting to fraud or likely fraud by the branch to higher office, whether it has been reported on time. Then comment on system of AWS, which is already I have explained. Then any other report like internal audit report, concurrent report, if it highlights something, it should be part of planning. Also, it should be mentioned here which are the open points. Then there are certain additional questionnaires are there as part of LFR. Branches dealing in foreign exchange transactions, recovery branches, where we have to give out details of the suit filed account in foreign exchange, the compliance of FEMA guidelines. Then clearinghouse doesn't not much, and there are certain other asset recovery branches where the valuation is very important, that needs to be checked. So this where we complete the LFAR. If anyone has any question on LFAR or IRAC, we can discuss that, or we will move to the we will look into the certain aspects of the Excel which will be done by me along with my colleague Nachiket. So we are open. I am open for the question answers. Nachiket. Are there any queries?
If the members participant, if there is any query, they can raise their hand by unmuting themselves and ask their query.
I have allowed to unmute. If anyone wants, they can just unmute themselves and ask questions. Sir, in chat box there was one question. Mahinder bhai, if you can read.
Just a moment.
So those two accounts which are in SMA2 and not going into NPA, those accounts should be reviewed for all practical purpose. Yes, this should be part of your sample along with other accounts also.
Ashish bhai, would you like to ask any other question?
My question, sir, I wanted to understand one thing is that just because of the interest charging, my amount is getting amount is getting beyond the sanction limit, the OCC account. Will this be a tantamounting to a NP account? Like basically the interest is getting charged, and because of the interest charge, the amount is getting and there is very small credits which is not even which is not even basically repaying the interest part. Is it an NPA?
Yes, see sir, in case of a CC account, the criteria is that if the account is overdrawn for more than 90 days for any reason and it is continuously overdrawn, then that account will become NPA, or there are credits which are not adequate to serve the interest. So like let's say there is an interest which is there on 31st December, 31st Jan and 31st Feb, 100 rupees. Even if the account is not overdrawn, but that means the total interest as on 28th February is 300 rupees. And during the 90 days back from 28th February, the credits are not adequate to cover that 300 rupees. So credits are only, let's say, 200 rupees. Then also that account will become NPA.
And suppose, sir, hypothetically, if suppose a term loan has been sanctioned to that party and that amount is coming from the term loan, then what happens in such a situation?
See, any appraisal is carried out, that appraisal is carried out for the total requirement of the borrower.
Okay.
So it may see, we need to see the what is the use of the term loan. So the utilization for the term loan is for buying a machine plant, buying a machinery or buying a factory building. In that case, if that amount is coming to the cash credit account, it should be immediately paid to the vendor. Okay, if it is not paid to the vendor, then that means the long-term fund have been utilized for the short-term purpose. So that cannot be, that itself is a diversion. So that account will be classified as NPA.
Any more question from the participant?
Yeah, I have already mentioned in my for the IRAC purpose, there is already, I have mentioned in my earlier PPT for advances that there is a circular of Master Circular of 1st April 22, which is available on the RBI website.
Sir, how old should be the valuation report, sir? How old should be the valuation report?
It should not, in respect of NPA account, it should not be not more than 3 years. In case of certain banks, for standard account also they give certain criteria. So we should go by that criteria. Otherwise, for standard account, there is no criteria laid down by the RBI.
Okay. Suppose is the valuation report is more older than by 5 years, 6 years, we can accept that valuation.
Yeah, for the standard account, not for the
standard account.
Yeah.
Okay. Sir, one more question. Sometimes what happens, the branch generally put the categorize the NPA by manual, putting the manual. Sometimes they do so. The report generate through the system, but sometimes they classify the advances manually, performing, non-performing.
See, if they are downgrading manually in addition to what identified in the system, we should not have any objection. But if they are upgrading it manually, even though system has not upgraded, it should be thoroughly checked and reason and justification should be asked for that. Meeting मध्ये एखादी lectures lectures आणि माझा चॅनल त्याचं कंप्लीट नाही झालं मी कॉल बॅक करतो.
Ram,
Shall we move ahead?
Yes, sir. We can move ahead, sir.
Yeah, Nachiket, you can show few Excel commands which will help carrying out audit.
Sir, everyone, is the screen visible?
Yes, sir. It is visible.
Yes. So one of the tools which we use in our branch audits is calculating interest. The template is made for calculating the interest on CC account or term loan account. First, we will show you the CC accounts. So we are using the if error function here. Hello?
Yes.
Yes, so we are using the if error function here for calculating the interest on CC accounts. Here what we are doing is how generally the interest is applied on CC account is every day closing balance is taken and on that 1 day interest is charged in the back end of the system. and whatever is the date on which as per the bank policy the interest is applied to the CC account, until that date the interest is calculated in the similar fashion and then it is applied to the account. So here if you see, we have taken one account statement for an instance. This is the closing balance on 1st April for the balance brought forward. Then on 3rd April till that time we have calculated the 2 days interest here. So if you see, we have put one function, that is if error. We have taken the closing balance into, we have multiplied by the rate of interest applicable to the account, and for how many days this closing balance was there in the account. So if you see, this closing balance is from 1st April to 3rd April. So this closing balance was available in the account for 2 days. So that's why we have taken this bracket B5 minus B4, that is this date minus this date. It will give you 2 days interest divided by 365. The purpose of using if error here rather than normal calculation is that if there is a credit balance, then here if you see, 1 minute. Shared window is closed. So if you see here, because of this credit, if we don't put if error and directly apply the formula,
So see, as we all know, the interest is charged on the debit balances. So what we have done is that we have converted the account statement which has been given by the bank in text file to Excel, and we have applied a if error formula. So if there is a debit, so when it gets converted, after conversion, what we have done, we have removed the debit mentioned in the accounts, and we have brought it to the numbers. And since in case of credit balances there need not be any interest to be charged, so we have calculated by using if error formula that if it is we have considered 9% as the interest, we have calculated a product for the each day, and after that calculating the product, we have calculated the total interest charged in the account. So if you see, the total interest charged in the account is, this is for the month of April. So total interest is charged in the account is 1,50,720.84, which you can see here. So if by using if error formula, you can actually on sample basis see that whether interest has been correctly calculated by the bank or not. So Nachiket, move to next
function. We are converting the file to Excel, data file into Excel.
So next is where we convert a notepad. Normally what happens that the banks gives us the data in the notepad because of the size. So we should able to convert it into Excel for carrying out any kind of analysis. So first we will convert it into the Excel, then we will carry out an analysis on the data file. So we will open the Excel and then we will paste that file as it is, which we have copied. So this is the way it appears. Then we will go for the convert to table, text to column field in the Excel sheet, and in the text to column field we will do the delimited. So once we do the delimited aspect, if you see there is a kind of a straight line everywhere. Bar symbol, remove this others first. There is a bar symbol which separate each text with other text, each column with other column. This is the way normally these files we receive. So we will put it here, other stick, and put that bar symbol here. Once we do that, we will check that whether it is correctly classified. No amounts are getting spill over to the next column. or no figures are getting spill over to the next column, and then we will do a, when we will click next twice, and wherever there is a date column, it will be date DMY, and all other fields we will recheck again, and then we will click finish. So by this we convert convert the text file into the what we call as a Excel file. Now in this Excel file we can see which accounts are, how many accounts are fund based, how many accounts are non-fund based, by applying pivot table. So for pivot table the command is, so you go to insert, there is a column on the left hand side is a pivot, apply that, so then you go to the custody. Custody is a unique custody for each borrower. Then go to amount outstanding. So from here you get the how much amount is outstanding for each borrower, whether it is a fund based or non-fund based. Then will be a, go to the flag. So there is a flag fund based or non-fund based.
Filter
No, add a column here for fund based, non-fund based. Don't put it in filter. So this is a borrower, custody is 7263. For their borrower, fund based limit is 0, non-fund limit is 128 for 12,88,400. This is where I am trying to tell you during our session also. We should also consider fund based, non-fund based limits while doing our sample, because in LFR the total of non-fund based, fund based we have to give. So after doing this, now we will go to identify whether there are any overdue amounts are there in respect of this borrower.
I'll flag this here.
So now we will check whether there is any overdue amount.
Only overdue.
So this gives how in respect of a specific borrower this amount is overdue. Now we will check whether it is part of fund base or non-fund base. So normally overdue comes only in case of fund base. So this is what the amount is coming as overdue. Next we will go, if it is overdue, how many days it is overdue, to identify whether it is NPA or not. So it gives past due days count. Some count. So what happens that now I will show you, we have to select the max. Why we have to select the max? Because we have to see whether an account is overdue for so in there could be, like, if we take an example of this account 875732 in the main sheet. Nachikeet, go to the main sheet. If we filter on this borrower specifically by doing filter, regular filter, this is a account, go back, so you can see, control F, search, you can see there are now in this account there are 1067 are only overdue dates, and there are certain blank also. That means it has captured only the highest overdue days. So similarly we can see, check in case of all accounts. So this we have checked how much, how by taking maximum overdue. Now we will check that now we know 1067 means it is more than 4 years old. So we will check what is the asset code for this and how much is provision for this.
You want it in pivot?
Pivot only you get. So I will take the highest asset code.
Average asset code. For calculation, everyone should have the same. No? All accounts should have same asset code.
I will take average asset code. So like this is a 40 asset code. So as per the bank guidelines, this is a code given for the loss asset. So we'll check whether there is a provision has been made for the all loss assets. So here if you see, do the fund based flag, there is a outstanding is some total outstanding is 120 crores, and there is a 100% provision for that. Similarly, in case of account next account, there is a 100% provision. So here we come to know that there is a adequate provision has been made. Now Nachiket, go to some provision which is less than 100. No.
This is less than 100.
So this is a, in case of this account, if we see that the provision is less than 100, but the asset code is 40, that is a loss account. So we will seek a clarification of the bank why it is less than 100 when it is already classified as a 40, which is a loss account. So similarly, we can identify such accounts and get a clarification from the bank stating why there is a lower provision in case of a NPA account. Now we will go to the account where days past dues are less than 90. It is filter. So we will do a filter in pivot itself. फिल्टर बाहर जीटा filter. Now here we will say the accounts which are more than 90. And here asset code is 11, which is standard 11 or 12. So in this case there is none of the asset codes is 11 or 12. That means all accounts which are more than 90 days have been classified as NPA. So with this we can actually check whether the whatever data generated by the bank is correctly classified as NPA or not. Now we will look into the two other this thing, which is one is we will just show it the example of that. One is a VLOOKUP and other is one is VLOOKUP and other is just a lookup. So like in this case we have if we have two files, this file again. So we have two files where we have a common identifying number, and we want to bring the like in this file, if you want, I want to bring a borrower name, let's say. So I will use a VLOOKUP formula because the borrower name is on the right side in the main file. So you could see that borrower name is on the right side. Custody is the unique field, which is a custody, is on the right side of the borrower name. So I will use a lookup formula.
Ascending order.
So first I have to do the bring the custody into the smallest to largest, that is in the ascending order, and then I will apply a lookup formula. So where I want to bring, I will use lookup. Lookup. Go to the field where I want to select it, which is a unique ID. Then I will go to the main file from where I have to select it, and I will drag it to the earlier column. And this gives the name of the customer. So by lookup, even if it is whether it is on the, if it is on the left hand side of the unique field, you can use lookup. Similarly, if it is on the right hand side of the unique field, we can give VLOOKUP. So this will help us to analyze the data when we receive the data at the first end, and the way we have shown you that we can convert the data. So if you get an account statement in the Excel format or text format. You can convert the account statement into Excel, which will help us to see whether there are adequate credits or not, or the repayment is getting on the regular basis, whether interest is calculated on the correct or not. So this is on the certain Excel tools which we try to show you in the limited time which we have today. Chat box. So this is Sham Bhai, this is from our side. We are open for any other additional queries also.
Yes. Thank you, sir. So we would request all the participants, if sir has deliberated on various aspects. So if someone has any query, they can just unmute themselves and ask sir, so that bank audit can be done in a very fruitful manner. So to start with, one of my query was, because all of the banks are under one system, but as you said in the beginning, all of them have same reports, but by different names and anything. So do we get a checklist or something where we can find it out that which bank has which kind of name for different reports?
See, sir, checklist. I have a checklist which I can share with Sham.
Okay.
So he can share it with you. These
Sure,
are
sir.
basically a nomenclature of the reports for various software which are used by various banks.
Okay.
So there is a compilation for all 12 public sector banks, so that I will send it to him through WhatsApp.
Okay, sir. Okay. Any more questions that you would like to ask?
I don't think there is any question.
Yeah.
We can conclude.
Nilima ji is there?
No,
So
there is no question. Huh? Shyam?
no,
Yes,
I
yes,
don't
yes.
think there is any more questions.
Okay.
So formally, I would like to thank Nilesh sir for taking time out from his busy schedule and gracing us with his knowledge and giving us guidance on how to do bank audits in a very comprehensive and fruitful manner. I believe all the participants must have enriched their knowledge with this session, and would request if anyone has any questions, they can directly call sir also. We'll share the email ID with you, and sir will share his and this recording will be uploaded on YouTube, so we'll share the links to all the participants so that they can refer it for future purpose also. So thank you very much, sir. Thank you so much for giving us your time.
Thank you
Thank
very
you,
much.
sir.
Thank
Thank you,
you.
Nilesh
Thank
bhai.
you.
Thank you very much for
Thank you.
explaining the thing in such a simple way. The one thing where you have said the bank branch audit is a 20-20 match. We have to hit the ball so that it should definitely go to the six. Because we have such a time frame audit, we have to complete within 5 to 6 days. And the way you have shown the planning, the time devotion to the category of the advances, LFAR, and the Excel tool which we should use in the bank branch audit is really commendable and very much helpful to all the participants.
Thank you. Thank you very much.
Thank you, sir. Thank you.
Thank you.
We'll see you again. Thank you, sir.